All right. Hello, everyone. Welcome back to the Black Brain Trust. I'm here with my co-facilitator, Lionel.
Hello, everyone. How's everyone today, Mike?
I'm good. Yourself, brother?
I am good. Thanks for asking.
All right. Um, Tonight is Economics, episode 120, New Year, New Crypto Talk. The docket is in the description beneath the video, and we will get started. Find my, Also, we are not certified financial planners. If you want a certified financial planner, go to cfp.net. And please hit the like button as you come in. Come on. All right. First article is from CNBC.com. Companies added way more jobs than expected in December, ADP, Moody's. Private payrolls rose by 271,000 in December, smashing Reuters estimates of 178,000, according to an ADP Moody's report. The the gain was the highest since February 2017 and brought the monthly average for 2018 to 203,000. Contrary to growing concerns about a potentially slowing U.S. Economy, job creation surged in December as measured by the latest ADP Moody's analytics survey released Thursday. Companies added 271,000 new positions as 2018 came to a close, smashing estimates of 178,000 from economists surveyed by Reuters. It was the survey's best month since February 2017, which saw a gain of 280,000 and brought the average monthly gain for last year to 206,000 jobs. December also showed a marked gain from November when just 157 new jobs were added, a total revised lower from the initially reported 179,000. Business, businesses continue to add, quote, businesses continue to add aggressively to their payrolls despite the stock market slump and the trade war. Favorably December weather, excuse me, Favorable December weather also helped lift the job market. Mark Zandi, chief economist of Moody's Analytics, said in a statement. At the current pace of job growth, low unemployment will get even closer. Professional and business services led the way with 66,000 new positions. Education, health services contributed to 61,000, and leisure and hospitality added 39,000. In all, service-related industries were responsible for 224,000 of the new hires, while goods producers rose by 47,000. I'm not gonna read this whole thing because I think you should read it for yourself if you have not read it. What do you think, Lino?
This is interesting, especially amid the December stock market crashes. Whatever correlation there is, if there is a correlation between I'm pretty sure there is a correlation. Now that I say that, between the stock market going down and companies cutting jobs. We even saw in the crypto world that these projects were cutting jobs. Amid all of that, and still have the jobs go up, employment go up. But then again, on the other side of the token, the what's used to dictate the unemployment is iffy, depending on what what uh what you use to count it. I just have to say is see what the reports say. The first part of this year, comparable to this article right here, I have no excuse. I have no reason, nothing to say as to why it went up. What could describe this? Only Christmas, holidays. People want to get a job to get a little extra money to buy gifts. That's the only reason I would say right now. I can't say right now as to this spike in employment.
Yeah. So the age bracket, the demographic that was targeted was 21 to 34. So your millennials are the majority of the hires. I think something like 80 to 85% of the hires were actually millennials. Um, and then I think like 35 to 45 was your latter breakdown, right? So your later 15 20% of age demographic. So what they're seeing is that millennials who were out of work before, either they picked up a second gig or this is a just seasonal gig for them. I find it interesting though that because retail is slowing down in terms of Sears and Kmart and so on and so forth. They're still hiring. Retail is still hiring.
Yeah, that's well. I would say retail is hiring to deal with the rush that
Hmm.
the of the shoppers, because there was a report saying this year people spent more money across the holidays. I would say retail's higher because of that, and I'm just going to attribute it to that. But like I said, we'll see what the comparison this first part of this year and that December spike. Um, yeah, I, that's the only reason I would say why this spike happened.
Hmm. Hey, O'Shea Duke Jackson, what's going on, brother? Good to have you in the chat.
What's
If you
going
want to
on,
get on the
brother
panel,
Fry?
let us know. We can send. If you want to get on the panel, we can send you a link. Um, Definitely appreciate you coming on. Yeah, definitely. I think what's happening now is Lyft, Uber, um, in your hospitality services, your PCAs, your personal care assistants. That's where you're seeing that job growth, right? You're seeing those just above minimum wage, right at minimum wage sort of jobs. It's not really those high paying IT jobs that's really doing the mass hiring because those are special skill sets.
I would agree with you on that. Yeah, I would agree with you on that. Also, people tend to work two jobs nowadays because of the other things. Yeah, I would agree with that.
Hmm. Yeah, yeah. I mean, this is where America is, and it's only going to get worse going forward. You Now we're seeing what 285,000, right? Uh, Rough a take. You may not you may not report some of your non-U.S. citizens as job growth, right? So next year this could be possibly less due to automation. Automation comes in, starts removing those jobs, and call centers and all that, and then you have autonomous vehicles coming with Waymo and GM and Lyft and Uber and stuff like that. You may see another $50,000, 50,000 jobs cut.
Now,
Keep in mind, for people listening to this, that one in every five of these jobs actually has an African American in it. So 20% of those jobs, that's where Black people are actually working.
I would say I would go out and say because of the loss of certain type of jobs because of these new technologies coming online, that it'll create a bottleneck, uh, uh, upside down bottleneck of people rushing to the lower tier, lower rung jobs because because it's something quick, and B, a lot of people may not want to read. train themselves. They just looking for a job, just to have a job, just to pay the bills, just to buy things with. So I think there'll be a bottleneck for these lower tier, lower rung jobs, and you'll see a lot of people because of that. You'll see a lot of people out of work.
It's coming. You know, black people don't really step their game up. You know, with these fourth industrial revolution skill sets, you are going to find yourself in permanent unemployment before you even reach retirement.
And that's bad because the largest generation in America are millennials. So, like Donald will
Hmm.
say, we called a bad break in terms of the business cycle, because in terms of the cycle. Turn of the century, hit the dot-com bubble, 2008, we had the housing crisis, and what's going on now with this transition in jobs. Like you said, you trying to reach your retirement and constantly being unemployed, not having a stable job, it's going to be harder. And then we're talking about this now. How will that affect, as a millennial, our future? Will we be able to buy a house where housing prices high? Uh, a lot of people are opting not to get married because it costs so much, because of the liability if it don't work out. Because of these things, how we're looking at life is changing, and the things we want to do in life is not what other generations told us. And not to say those generations gave us bad advice. It's just the terrain has changed. So we got to do things. We're the first ones, first generation to do things differently.
And take into consideration that you may not have a 401k, or you may not get a pension, because those things are going away. So if you're a millennial, if you're a zennial for that matter, for zennial, you're not getting a pension. That's over and done with. The baby boomers took that, and the Gen Xers were probably the last ones to receive it. If you're a
Which
millennial,
makes things.
that's
Go ahead.
that's a possibility. If you're a zennial, that's out of the question. The whole entire, like you said, about millennials not buying houses, zennials won't be buying houses either. If things keep going the way that they go, you're going to see more of a Airbnb type of setup. As a permanent living arrangement. You may stay at a place for 2 or 3 months, and then you move on to somebody else's spot
Yeah,
doing that.
and that. Go ahead.
No, go ahead.
And that makes things worse because now you don't have a set foundation under your feet. You're steady moving. You're a hunter gatherer. You can't stay in one location long enough to build up uh,
Equity.
your own self. You're at your equity. So,
Hmm.
what, just speaking as of right now, 7:30. Um, the rents are high. Houses are expensive. Schooling is damn near out the question because how much it costs. Marriage is a liability right now because
Hmm.
of how much it costs to go in. It costs $250,000 the last time I checked to raise a child from birth to 18. So the birth rates are low. So marriage divorce rates are high. All of those things
Hmm.
are is debt upon debt upon debt, potential debt upon potential debt upon potential debt. So we're looking at this. The ones that are aware of these things, that are look at these videos on YouTube, that and listening to these panels that talk about these things. We're aware of these things. We're saying, okay, I can't really do that because of the liabilities. The terrain is different. The ways in which the paths we that was once walked is different. We got to make another path. So what to do now? So obviously, here on the Black Brain Trust, we are saying, hey, retrain yourself because of these technologies that are coming up. They're going to be in demand for jobs. So a bull now before it gets out of hand, and be at the forefront of this fourth industrial revolution.
Hmm. Better learn how to code. That's all I can say.
Yeah.
All right, let's move on to the next article. All right, this one is from fastcompany.com. The surprisingly bright future of retail. Six predictions, six predictions for how we'll shop in 2019, from embracing IRL stores to ditching Amazon. This is a long one. I don't want to read too much of it, but everybody, I'd like to announce that the retail apocalypse has been officially canceled. It turns out humans do occasionally like putting down their smartphones, leaving their sofas, and going to a real brick and mortar store to make a purchase. Over the last 3 years, thousands of stores shuttered and dozens of companies went bankrupt. In 2017 alone, 7,000 stores closed their doors, and many brands with large retail footprints filed for Chapter 11, including Toys R Us, Gymboree, Payless, Wet Seal, and The Limited. Many experts expected 2018 to be even more disastrous to retail industry, but that didn't happen. In 2018, about half as many stores closed as the year before. In an interesting twist, we saw a rebirth of physical retail, with startups developing their own take on stores and large real estate companies rethinking how malls should be designed. Looking back, looking back, the problem wasn't that people hadn't gotten too lazy to leave their homes. It's that brands had become complacent about making shopping in real life a worthwhile experience. This past year, brands have been throwing retail concepts against the wall to see what sticks. Remember Glossier's all pink Instagrammable cafe and Nadim's $75 sweater shop. But in 2019, we predict that brands and consumers will settle into a new normal with stores. There will be fewer gimmicks, but shopping will be even more seamless. It's just one of the many ways retail will be transformed in 2019. Here's a full list of our predictions. Brick and mortar makes a comeback. Brick and mortar 2.0 looks different. Amazon backlash is real. Social shopping will finally happen. Sustainable or bust. But please, no more flowery walls. Let me get to this Amazon one. Get to Amazon one. I think that's really important. The Amazon backlash is real. That said, a lot of people have had enough of Amazon. As my colleague Kale Weissman points out, there's been a growing anger against Amazon for its cutthroat business practices. Workers at Amazon warehouses regularly complain about how low pay and poor treatment. Adding, adding to the furor, many people were disgusted by the way Amazon acts cities to compete with one another to become the site of Amazon's second headquarters. Some saw this as an elaborate data gathering operation. In the end, Amazon selected New York City and Northern Virginia, which made people in those cities unhappy because rents in those cities would likely go up. People seem to be canceling their Amazon Prime subscription, judging by Google Trends data showing that searches for cancel Amazon Prime have spiked over the last year. Right now, given Amazon's powerful position in e-commerce, it does not seem like such a big deal. But Weissman points out that the backlash is real and will only continue to build in 2019. This is interesting, right? Dollar Will really was one of the first defenders of this idea that people like to be social. They want to go out into public and and still do their shopping. Like brick and mortar is still there. So what's happening now, I think, is that there's a lot of brand rejection. If you're Amazon and you have a bad reputation, that can really hurt you. Especially because you don't have any brick and mortar set up. So people just may not want to deal with your little smiley face on your beige packages, right? That doesn't really work. Amazon's problem is that they have an image issue. Their image is not like Apple's image. When people go to Apple stores, they go for the experience. When people buy from Amazon, it's about convenience. But if the convenience is outweighed by the negativity and the stigma of the brand, then opening up a brick and mortar now would be suicide. So even if they bought Sears or they bought Target, they're screwed. This may go bust for them.
Yeah, I'm back. I had the phone call. My bad.
Absolutely.
Okay, we've been talking on the show for weeks. It seems like of the very same things this article has was written about. The first prediction was brick and mortar makes a comeback. I know Dollar Will has been saying that. I agree with him also on the basis of combined brick and mortar makes a comeback with what is it? Social shopping will finally happen. We've especially Dollar Will, we said that humans were social creatures and we like to be around each other. We like to see each other, even if it's just to be outside the house. Um,
Mm-hmm.
I know other people have said that brick and mortar will not totally go extinct because of that. Also, the other part, brick and mortar 2.0 looks different. I see this as a generation uh, influencing a generational influence. The older generation, the baby boomers, the Generation X, and even the generation for those other lives before the baby boomers and Gen X, they saw the internet come. They say, "Wow, this is more convenient than getting in a car, going to the store, and doing resistant." But it seemed like more embraced it. They saw Amazon as something. You had the Amazon retail apocalypse that shut down the likes of Radio Shack, Circuit City, made other stores that are still alive close a number of their stores, such as Macy's, JCPenney, Sears, Kmart, so forth. And now it's like a reversal. You have millennials coming up and saying, "Hey, we grew up with this technology. It's fine and dandy. It's good for what it is, but we like to be around each other. We like to go out shopping." So I see that brick and mortar 2.0 looks different, where you'll see a comeback of brick and mortar stores, but it won't look like they did before. I'll give an example of when I was younger. I'm a millennial, but when I was younger, I remember going to Toys R Us and it being the grandiose event, like the lights, the toys, the line of checkouts, you know, huh?
Yeah.
And
No, I was
this,
just gonna say like that. I was just gonna say that it was like a if you wanted toys, that was the place you went to. That was like the undisputed place, right? If you wanted to
right,
go and get video, you would go to Blockbuster, right? You would be waiting for the next release of like Die Hard 2 or something like that.
right. But it's not going to look like that anymore. I don't know how it's going to look like, but it's not going to be that specific and that grandiose.
Mm-hmm. Dollar, what's going on?
What's going on, Dollar? How you doing?
What's happening, fellas? What's
How you
happening?
doing?
Chilling, bro. Chilling. What's your take on this?
From the part I heard, yeah, just to restate, you represented my views pretty well. Yeah, it's something they're gonna have to change the experience and make it more dynamic, the shopping experience. But shopping is not going away. I mean, like you said, human beings are social creatures, and that is the whole magic of social media, which we're on right now. We have a psychological dependency on one another.
Mm-hmm. And I think black people are missing out on a big retail opportunity from a brick and mortar perspective, because a lot of these malls that are closing down, these plazas and all that stuff, they're going for dirt cheap on the market. I think we covered an article back in the summertime where one of these malls in the Northeast, I think it may have been Pennsylvania or something like that, 1 million square feet went for $100 on the market.
Yeah, I
Wow.
saw that.
You can't beat that. You
Wow.
can't beat that. So
Well, I was thinking.
there's a lot of. Go ahead. Go ahead.
No. Go ahead. Finish your point.
No, no, I was just gonna say that I think the idea of buying things is the whole shopping experience is not the same. So you have to approach it differently. There has to be some kind of incentive to keep recurring traffic, foot traffic coming back in. So crypto tokens and cryptocurrency payments and the ability to use Apple Pay and Google Pay and things like that are actually going to be game changers. The ability to walk into a store and use your facial recognition or biometrics to actually pay for goods is actually going to be a game changer.
Mm-hmm.
I think we're going to develop more offerings in the shopping mall experience. I don't necessarily mean different types of stores, but more things to do in that space. And shopping will just be one of the things. It's sort of like how we've seen the whole gaming thing. You know how they have these, I don't know what you call them, when you go to the mall or some strip mall
Arcades.
or arcade. Yeah, the way the arcades now, where you could those players could, they could be at home, but no, they want to go to this center with other gamers playing the same game, kind of thing. It's just, it's something about it that need to be in that same space. And let's not minimize the obvious, people watching.
Mm.
You know,
The
They have to cap. Yeah, they have to. Go ahead, Edino. Go ahead.
I would say the need to be where it's happening at. You need to be there. It's happening here. I need to be there.
right, and it need to be seen too. The need to see and it need to be seen.
Advertisers are going to have to capitalize off of every square inch or every square meter of the mall itself, the physical aspect of the mall. That means the tile that you walk on the floor, that's going to have to be capitalized. You're going to have to start putting down advertisements on floors now in order to recoup revenue and stuff like that.
Wow, I didn't think of that. Wow.
Yeah.
But whatever you think about it, what the heck have they been doing all this time? What a waste.
Yeah, because even like the trains in Boston and on the buses, if you look at the ceiling, they're using the ceilings now as advertising space. So you look up, because most people look up because they don't want to look at the next person next to them or across from them. You look up, there's an advertisement there. There's an advertisement there.
And wait a minute, now I can see if we talk about it in the urinal, but walking. Yeah, look up. Now that's a good place for ceiling advertisements in the urinal, but not walking down the mezzanine,
People do that though.
No. If you're sitting on the bus, you might not, right? Because everybody has their earphones in. They don't want to look at each other. I know females who put on shades just so they don't have to make eye contact. But if you look at a lot of people on the buses and trains, they're always looking up or they're looking aloof, right? They're always looking somewhere out of the open. So what they started doing was they started putting advertisements on the ceilings, and that actually works. It's been effective.
Yeah. A sidebar, women, if you listen, you might want to take off them headphones, make some eye contact, go back to old school. Anyway.
You have to change the way you start dating.
Yeah. What's going on, Preem? How you doing?
Hey, everything's good. What's going on, everybody? I think, well, something else that would play a factor is also what we're seeing right now, with gas prices being like $1.85, folks aren't really double thinking about hopping in the car and driving here and driving there. Even if, it may be to shop, or it may just be just like a random impulsive trip or whatever, but that also would have an impact, because you're actually getting that consumer out of the house. And again, they may not be getting out the house to shop, but they may pass by a place, a retail place, and stop in there. So that little thing, as far as gas prices being low, is definitely helping the retail space as well. And I know folks that are just totally e-commerce, they wouldn't like that, because they would rather people stay inside and do everything from inside. And then when they needed to leave, to have someone come and get them. But, by folks getting out and in the open, it increases the possibility of them just randomly stopping in the store, just being like, well, maybe let's go check this place out, because, when gas is like, again, down here,
window shopping.
When gas is like $1.85, a gallon. It's pretty much out of sight, out of mind. When it's that low, nobody's even thinking about it.
Mm-hmm. Yeah, I think Google has a project going for mapping out malls now too. So like on your phone, the Google Maps would do interior mapping as well. So it tells you exactly when the next store is and what advertisements pop-ups will come up on your phone, like, oh, so and so is having 20% off at Bed Bath and Beyond or something like that. And it's only like 10 feet away, and next thing you know, you just walk over there because your phone got an alert for that.
For people who still do alerts, I keep off my shit like off, just about.
Oh,
That's a one email account.
okay, you're off the grid then.
I try to, nah, that's impossible. I think I try to be. I'm just off the alert grid, for that because it just gets annoying after a while, man. I mean, it just got annoying.
Mm-hmm.
It gets annoying. And you break your train of thought because you're always you have these fragmented billion fragmented trains of thoughts or frames of thoughts to process every little thing throughout the day, man. It's terrible. But I'm sorry, I digress.
All right, let's hit the next article. All right, this one is from entrepreneur.com. Apple stocks free falls after poor sales in China. Weak iPhone sales in China fueled investors' fears of a slowing global economy and led to further selling of stocks today. Tech bellwether Apple Incorporated reduced forward revenue guidance today because of slowing business in China. CEO Tim Scott cited trade tensions as a determining factor, but said the company had not foreseen, quote, the magnitude of economic deceleration. Mike, can you please mute yourself? The magnitude of economic deceleration in the world's second largest economy. Apple shares were down 9.96%, setting a new 52-week low. Apple's bad news dragged down the rest of the technology sector, with the tech-heavy Nasdaq Composite Index falling 3.04% on the day. The Dow and the S&P 500 indexes were down 2.83% and 2.48% respectively. The Entrepreneur Index fell 1.83%, with declining numbers advancing by 45 to 15. Economy-sensitive semiconductor stocks were hit hardest. NVIDIA Corp and Analog Devices had the two biggest declines on the Entrepreneur Index today, falling 6.01% and 6.13% respectively. Travel website TripAdvisor Incorporated was also down 5.86%. Adobe Systems Incorporated, -4%, and Salesforce down -3.76%. Both fell sharply. Netflix, up 1.32%, was the only tech stock of the 13 on the Entrepreneur Index that had a gain on the day. I don't want to read this whole thing because it's not really relevant, but Apple, $450 billion loss in 3 months. How sustainable is that, Mr. Darlow?
Are you asking me a fundamental question?
I'm just asking the question.
You're asking me a fundamental analysis question. Well, I would say, given the amount of money that Apple has, that company is loaded. Apple is the largest market cap stock in America. And what that means is there's more money. If you took all the money invested in Apple and took all the shares of Apple that people have purchased and multiplied it by the share price, if you found that same formula for every stock, the more money has been invested in Apple than any other company in America, including Exxon. It was a big deal when Apple surpassed Exxon. Forever, Exxon was the market cap leader. So in that sense, Apple is loaded. So they can withstand it. But they, as we talked about on past shows, the thing for me is, what is Apple going to do with that money? I mean, because we're in a downtrend, a retail downtrend, and there's a good news, bad news situation when you're king. When you are the market cap leader, that means you're the most popular, the most attractive stock. So that also means that your price to earnings ratio is the highest. It's going to be extremely high because it's just to reflect the popularity. Now, when the perception of the strength of the market changes, or when pessimism comes over the market due to some, in this case, due to some macroeconomic issues that have really nothing to do with Apple, that premium, that additional price to earning ratio, that bloated price to earning ratio, the excess that represents the premium, that gets taken away. People start selling. They don't want to pay. They don't want to pay more today for Apple on the premise that, or on the hope and faith that Apple will be worth more tomorrow. Well, for the last 10 years that worked, but now that no one really believes that tomorrow will be better, no one wants to pay that premium. So they start looking at how much of their money is invested in Apple, and they start scaling out of it. They don't want all their money, not only just in Apple, but they don't want all their money in retail. So a lot of money is leaving retail, including Apple, and going elsewhere. Some of it is just going on the sideline, and as we'll take a look later in the show to see where money went this week. I haven't even checked it out yet myself, but that's what we're going to do every week. We're going to see where the money went, and we'll see where it went when it as it left. Where it went, where yeah, where it left and where it went.
Go ahead, Lionel. All right, we'll move on to Preem. Go ahead, Preem.
Oh, okay. I'm sorry. What was the question? I was listening to all of you. I heard everything, but I didn't know. Was there a question in there, or just what's your
take? Yeah, what's your take on Apple's $450 billion loss over 3 months, and in today's news?
Oh yeah, pretty much. I agree with what the consensus is. Amongst the folks that are on Wall Street who watch this company, study it. I don't. But from the standpoint that they just, they don't innovate. They haven't innovated in a long time, and that was one rub. And the second rub was that, in China, they raised the price on their iPhone, their signature product that drives over the majority of the revenue. They raised it by 23% in that country, and so something I heard somebody say is, whereas in the United States, the average consumer has a GDP or GDP of the average consumer, whatever that means, whatever, but just from a comparison analysis, it's 63 grand, it's $63,000, versus in China, it's $10,000. Now, of course, there's people in China that can buy that phone. There's no ifs, ands, or buts about it. I mean, you talk about a country of 1 billion people, there are folks that can drop, that $1,000. But I mean, if you're looking at it, from that perspective, I mean, for me, it's just common sense. I mean, if you have people in the United States that are already murmuring, man, they ain't doing nothing special. They keep coming with all these phones, iPhone X, XR, XR Sport, this, that, and whatever, and there's nothing really new or innovative about it. I hear that a lot. I'm not an Apple owner, but I hear those murmurings a lot. And the second murmuring I hear is the phones are expensive as hell. So if that's being said here, I already know, again, just common sense. I don't have to be Chinese. I just already know that that's going to be a major issue there in the country, to where the GDP per person is a whole lot lower. And then finally, something else that I found out recently, because I just found the story fascinating, so I've been watching and listening to it all week, was that in China they have this thing called WeChat. I've heard of WeChat before, but I've never done a deep dive into it. But essentially, in layman's term, and feel free to correct me if I'm wrong on the details, because I don't know too much about it, but it's that WeChat is like having Facebook, Netflix, WhatsApp, Instagram, all in one thing, all in one platform. And that platform is you can move it from phone to phone to phone. So whereas here, Apple has you locked in with your photos and with your music in their ecosystem, shout out to them. You know, I can't knock that. You know, that's just, you know, that's their business. They can't put that fence around their herd like that in China. So all those things that people cover, you know, that they love over here, they don't want to lose, and that's preventing them from switching out of the Apple ecosystem over there. They don't, you know, they don't have that foothold. So people are indifferent. They can take all their stuff, all the valuable stuff out of the Apple phone, go to Android, or go to that other phone that's over there that's really popular. That's a Chinese made phone that people say, you know, it's you know, it's just pretty much it's apples to apples, pun intended, when you compare it to an Apple phone. So, you know, maybe I challenge this one when I see. It'll be interesting.
Yeah,
Jump in, Lino.
Remember a couple months back, Apple said that they'll no longer report their sales earnings or items units being moved. I forgot which one they said they weren't going to
yeah,
report.
they weren't going to break it out by like which product, like tell you how many iPhones they sold versus how many laptops. They weren't going to break it out, itemize it.
Now I'm thinking they knew then. And at the all-time high, Apple stock was 228. Now, last saw was 140 something. That's a major drop in the traditional stock market world. You know, that's excuse me, that's a major drop. And Apple with your money dollar will. I got to take your quote because that thing is dropping right now. But I also agree with you. They do have the money. Apple has a lot of money, and they're buying back stocks, which would I'm believing they're trying to level out their stock price when they do that. So we'll see.
And
I don't know if that's one.
really quick, Donald, I just want to ask you a question. Sorry to interrupt, but answer it after you had to say what you had to say. But when they said they weren't going to break out their product or break out their earnings by product, I know you're not a fundamentals guy, but what did that smell like to you?
That they're trying to hide. That they're trying to hide that something. Okay, the iPhone has been the leading profit center for Apple for the last couple of years. If the iPhone sales go down, and that would really make people lose faith in the company. So, but if you just report the total number, or let's say Apple's profits are down, or you know the profits or revenue is down, and you don't know what caused it, you know, then people will be free to debate. Well, nobody's buying the desktop, or it's the iWatch, you know. But if you break it out by individual products, you know, people can say, well, wait a minute, it's the iPhone.
Well, how did they spin it? Because if it's just that cut and dry, that sounds pretty blatant to me. That it's how they're trying to do. So how did they spin it? Did they even try to spin it?
No, they just said that they're not gonna break it out. And so you know, it was sounding suspicious to me. It wasn't nothing to me that would make me you know, feel encouraged about the future. You know, I'm already a technical chart purist. I'm already pessimistic. And then Apple comes out and says, you know, we're not going to be as transparent in our reporting as we have been. Now, why now? I mean, it's just never good to not be transparent anyway. What's the justification for being less transparent?
Because when you start comparing the numbers to Huawei, Samsung was destroying Apple at one point until Huawei came around. That doesn't look too well on paper.
Yeah, but if I see it, if I can see the damage, if I can see how bad it is, you can spin that. But if I can't see how bad it is, I can imagine that it's far worse than it is. So it's like, you know, we're gonna sit up here and guess just how bad is it? Just how badly does that body stink? You know, hey, we'll see how this fares, because when you combine that with the fact that Apple's not doing anything with this money. I mean, you're telling me buying shares back, that's a bad move. Why would you buy the shares back as the price is falling? You're not going to stop the share price from falling. You know, I mean, it seems to me a smart move would be to diversify, buy something, spend that money someplace else, and you wait it out, diversify the company, you know, a little bit. As you pointed out, Mike, you talked about the ways that, you know, Bezos is diversified with Amazon is buying. What you said, was it Whole Foods?
No, Target.
Target. What was the grocery store that they own?
They bought Whole Foods last year.
Right. Yeah, that's what I meant. Yeah, they bought Whole Foods. So yeah, so they're trying to get into other sectors so that you don't lose. Basically have all your eggs in one basket. That basket being the retail, in this case, the retail sector of the economy. So
does anybody know? I haven't paid attention in a while, but all the Targets around here have the supermarket side to it. Is that the same for anybody else who has a Target in there? Have they converted them all to this? Okay.
Yes. So Target.
Yeah, go ahead.
No, go ahead, Mike.
No, I was just going to say that was a strategic move to stop people from, because most Targets are either by a market basket or a Stop and Shop or a Piggly Wiggly. The idea is to keep them in that store, and so that they don't go somewhere else to shop to get their groceries. Yeah,
I just didn't know if they had, you know, retrofitted like all the spots like this. So I guess all of them like that. Now, riddle me this. Pardon for digression, was, you know, Target obviously did that. You know, Walmart had the retail with the food grocery. I'm not sure, you know, who came first or whatever. I think Walmart came first, and Target was quick to market. Now Amazon buys Target. Amazon already has retail with their e-commerce. They've already got produce and food with Whole Foods. So I'm really lost on that. Now, if it's for the space, well, like you said, you got empty Sears about to come up, empty Kmart's, yada yada yo. But I don't know what would be the game plan with that. But let me just stay focused on the cannibalizing thing. They've got retail, and they've already got food.
Well, Whole Foods is a completely different brand than Amazon. They have their own marketing team. They're separate. They hang together, but they're separate. Amazon is just the daddy or just the parent. They really don't have any insight on what goes on. So they have to adopt. They have to follow Whole Foods. If you go into most Whole Foods, you'll see Amazon Prime flyers everywhere, and little Amazon kiosk everywhere. And now you got Amazon lockers inside some of these places or outside of these Whole Foods. So it's really Whole Foods driving the marketing aspect, and Amazon just has to adopt the store itself and integrate itself into the store, because it really does not have a marketing structure at all. That's where they fall flat, and that's part of Jeff Bezos is not Steve Jobs. He's not that guy. He doesn't have that vision. He's not creative. He just has a lot of money. He's just a whale. He splashes everywhere he goes and makes a big mess for the most part.
And also, Prem, when you talk about trading stocks, when companies have a lot of cash, amount of money, the stockholders are like, well, where's my cut of the money? Either pay me a dividend or buy something. Because that's what the stockholders are like. I own you. You exist for me. You exist to put money in my pocket. So what you doing with the money? Get up off the cash. Either give me some of that dividend, increase the dividend, pay me some money, or show me what your plans are for how you gonna wisely spend that money. So that's your choice. Once you become a publicly traded company, the stockholders are sitting there wanting to know how you gonna manage that cash.
Is that what you say verbatim when you show up to one of your stockholder meetings and you're there on the microphone? How much does it bad you say that? Where's my cash?
But that's the good problem you have. Go ahead, Mike.
No, I was just
Go
gonna
ahead,
say with
Mike.
his HNIC shirt.
Right, right, right,
No,
right.
it's just yeah,
Yeah, I
yeah,
mean
yeah.
that's a good problem to have when you're successful and you make. Look at Exxon. Exxon is in what the oil exploration, oil refinery. Then they was owning the retail part, getting your money when you come in to buy the potato chips and all of that. I mean, they got to find ways to spend that money.
Yeah, and just really quick, I really like the idea someone launched out there that that they're thinking about getting into the pharmaceuticals. I think that's great because it got so much information on people. They already sell over the counter stuff there. I think that would be a slam dunk for them, but I'm not sure what type of legal hurdles or whatever they may have to go through to go there. But I think that would be a great move for them. It's just I'm lost on the you already own retail, you already own a supermarket. Why would you buy another one? Knowing,
Oh,
and there's so. Mhm.
so Target is not a supermarket. It's a consumer goods store, but it's not a supermarket first. It's a supermarket second. So they're looking at the retail aspect. They're looking at the branding. So that's what's attracting Amazon to Target, right? No one's really interested in Sears because Sears doesn't have that cachet, right? They don't have that that appeal anymore. They lost that appeal a long time ago. So there's no real reason for them to look at Sears, but unless they just want the brick and mortar aspect. Um, they're probably looking at Apple. I think recently they hired somebody from Apple, if I remember correctly. I forget this person's name, but if I remember correctly, they became a part of their digital marketing team or something like that. Maybe Amazon is drafting new talent, to start focusing on marketing. But in terms of Apple, in this article, Apple's going to struggle for a lot longer because, as you mentioned, Preem, about Chinese household income being 10,000. In India it's 2,000. In Africa, it's less than $100. So where are you going to sell these phones? Where are you going to sell these tablets? Who's going to buy them? Why would anybody want to buy one after their MacBook that they bought in 2012? The battery is not charging, keeping it charged, or the logic board needs to be replaced. Stupid updates, slowing the home time machine down. At that point, you're frustrated. You don't want that anymore. You can go get a Google Chromebook for one tenth of the price and does the same exact thing. Unless you need to do some productivity apps like Pro Tools or something like that, or Fruity Loops. There's nothing really there for you to. There's no real justification to hold on to a MacBook or to buy a new iPhone at $1,000 when you can buy a Huawei at 400 and less, and it does 99.9% of what you needed to do that the iPhone can do. There's really no place for Apple to go anymore, other than up. They have to scale out. They have to scale up and they have to scale out. They need a new product, and they don't have a visionary. Steve Jobs is gone. His Apple Watch idea, his Apple the iPad tablet, that those were his ideas. There's nothing coming out of Apple right now that is revolutionary, and at this point they're suffering.
And this guy's the same guy who bought Tim Cook, who bought Beats for what, $3 billion. I mean, I
Apple,
could.
yeah,
Mhm.
Steve Jobs would have never had made that move.
Right, true.
He would have never had made that move.
Why not? Pride or ego, or he wouldn't? He would take it as an insult. I mean, he was just a creative person. He
No,
wouldn't need to.
he would make his own competitive product. Because instead of having a Beats head, instead of trying to buy Beats, he would have created a better Beats headset. That means that the headset would have had telephony capabilities. It would have had music storage in there. It would have had 128 gigs of memory and a wireless microphone and so on and so forth. It would have had all those capabilities. It would have had Siri built into the headset. That's how Steve Jobs thinks. This guy, Tim Cook, is not the same guy. He's just somebody, who's a puppet, who's basically steering the ship, and the ship is already on autopilot for the most part.
And last but not least, those AirPods that are out right now. I mean, I'm still an old school wrap around the ear, type of headphone guy. But those AirPods, are those innovative in any way?
You would have to text Dollar Will. He uses those.
I'm sorry, what's the question?
Those AirPods, are they a game changer? Are they innovative in any way?
Oh, I cannot speak to it. I don't know it. Never tested it.
Mm-hmm.
Okay, just
All right,
curious.
let's get to the next article.
Yeah.
All right, this one is from Quartz.com. U.S. founders predict the best entrepreneurs will come from these 11 companies. Are tech behemoths like Google and Amazon really the most places to find the next generation of promising entrepreneurs? Not according to today's founders. For its fourth annual State of Startups survey, the early stage venture capital fund First Round Capital polled 529 venture-backed startup founders in the U.S., asking them a wide range of questions about their entrepreneurial life. Among the more proactive questions posed by uh, First Round was, quote, which U.S. based company is most likely to spin out the next generation of notable founders over the next 5 years? Despite its brief but tumultuous history, Uber, the scandal-wary ride-sharing behemoth, formerly led by Travis Kalanick, and now racing to go public, was the most popular response. First Round was one of the earliest investors in Uber, though it says the survey did not encourage respondents to select from the first round funded companies in any way. So let's look at this list, where founders say the next wave of top entrepreneurs will come from. Uber at 22.5%, Slack 15.7%, Stripe, Airbnb, Coinbase, Palantir, SpaceX, Lyft, WeWork, Amazon, Pinterest, and others. The survey findings were released in December 2018. Demographically, the respondents were 17.4% female, 82% male, at companies founded within the past 11 years ago. With headcounts ranging from less than 6 people to more than 250 people, the most popular sectors represented in the survey were enterprise, 35 and 35.2%, consumers 15.2%, financial tech 12.1, and healthcare 10.8. You can read the rest of the results here. So, what do you guys think about entrepreneurs?
I think it's going to be tough for entrepreneurs to get money while we're in this downturn, at least in terms of this. Let me say, not say downturn. Let me say wealth destruction in the stock market. It's, I think that's. I wonder why they even putting the article together at this point in time. It doesn't seem like a well-timed article. I mean, what are we talking about? It's like these are companies. We're talking about individuals. Okay, well, if these people, if we're saying, if the implication is, okay, the people that own these companies are going to be, which of these CEOs or entrepreneurs behind these companies, which one is going to be like the next Jeff Bezos? Well, first they have to make sure that their company survives this downturn, this implosion on the stock market. Because some big names that we know are not going to be around. So, hate to be doom and gloom, but I think that's who's that editor? Who said this is a good article to write right now? We'll see. I say first survive, but right now this looks like it's time. The whales own the show. I don't see any mavericks coming from left field. No, this is all about Bezos, Buffett, Apple. Google.
Elon Musk.
deep pockets.
Airplane.
Yeah, the $1 million question that I would have, and not to say that it's going to happen or not going to or going to happen, is just I'm curious is I wonder what problem that they are seeing these folks that these folks are gonna solve. You know, I'm just curious. I know. You know, for them to have a startup, they're gonna have to solve a problem. That's how you bring value to the marketplace. But I would just like to get my mind widened. You know, in the enterprise space, in the consumer space, in the retail space, in the fintech space, what are they seeing that would be a great opportunity, for them, what they're seeing as a problem or a pain that presents a great opportunity, for a startup to emerge to go ahead and solve that. If I was to throw my hat in the ring, I would one that comes to mind because it's near and dear to my heart in many different ways. Is the whole payment platform, payment processing thing. And that right there is looking and showing that it's going to be a good opportunity for somebody. I mean, people are already working on it, but having alternate means and there's options out there with crypto and this, that, and whatever. But that will fall into the whole fintech thing. And I'm not even sure that's one of the problems these folks are even thinking about. They're more than likely probably could care less, or they're probably happy about what's going on. But again, I would just be curious as to what are the problems, the bottlenecks that they're currently seeing in the current economy that needs solving, and that these new entrepreneurs are going to come out to solve it. And I know there is a problem. I know they are going to solve it. I'm just curious as to get some the inside scoop on it.
Mino, you have anything you want to add to this? I think Mino's away. We'll move on to the next. Next item on the docket. All right, this next one is from RT. Will Russia, China, Turkey, and India drop the dollar? Read the caption. What happened to the U.S. economy in the last month of 2018? According to economists, it was historically bad, alongside volatility and uncertainty. Some countries are planning to no longer use the U.S. dollar as a standard, but why? Former CFTC Commissioner Bart Chilton, host of Boom Buzz, joins us. Okay, so what's happening now is that these countries, 4 countries, Russia, China, Turkey, and India, for the most part, are riding the razor's edge when it comes to using the dollar. Let's take 2 countries, right? Russia has sanctions on it. They having a hard time getting necessary doing business in necessary countries because of the sanctions. So the dollar is almost of no use to them at this point. China is in a trade war with the United States. Turkey, the lira has plummeted since U.S. put sanctions on Turkey because of the purchase of the S-400 surface-to-air missile system. India has seen quite a bit of a dip because of their purchase of their acquisition of this S-400 missile system. A lot of these countries also do business with each other. Russia and China are joined at the hip in terms of business. India has strong business ties with Russia. Turkey has strong business ties with Russia. China is the number 2 superpower in terms of manufacturing of goods and spending. So their consumerist class is actually growing and not really dependent upon the U.S. dollar immediately for their purchases. Their power actually is starting to wane because of the trade war. Dollar, do you have any insight on this?
I have no insight. I only have an opinion. I'll see it when all this talk about countries fleeing the dollar. It's a whole lot of talk, but not enough action. Do it. I think it's easier said than done. You know, everybody needs energy, and if these countries have to import energy, if that's denominated in that is denominated in dollars, so it's going to be pretty hard to flee the dollar. And I also think that just thinking, looking at it from the chart perspective, when this dollar run, it's going to hurt. It's going to get worse for them. That's in the short term. It's going to get worse, but it's going to be real bad for a short amount of time in the long run. So I think they could end up doing more damage. You know, they be, and I think a lot of them are just going to weather the storm. It would take them. It would be too disruptive for maybe a short term gain, and maybe in the long term, not really do them much good. We'll see. Because I think once it's this dollar rise. The dollar bottom was in 2011. That's a long time ago, and I'm of the camp that it has not peaked. It's got a vicious up one coming, and it's going to hurt all these other currencies much more than it's hurting them right now. So in the short term, I can understand why they're complaining. You know, as their purchasing power is going to get diminished. It's going to be like it's going to really hurt. But in the long term, things will normalize, and they're going to be on the winning end of the equation. It's just that everybody's used to the dollar perpetually getting weaker, you know. But nothing falls, you know, straight down forever, you know. And it was time for the dollar to recover from its extreme. The dollar has fallen down to, let's say, versus the Swiss franc. At its low in 2011, it was 70 cents. 71 dollar was worth one Swiss franc was worth the US dollar was worth 70 cents for every Swiss franc. So now we're teetering around the parity line of the dollar being almost, right now it's around 98 cents or something. So we're approaching that parity line where $1 is equal to one Swiss franc. And all of these various countries have their various, you know, relationships like that. But the dollar is, you know, when the dollar continues its decline, the world will chill out. So I think for all the talk of countries saying they're going to flee the dollar. I'm like, yeah, do it. If it was that simple, they would have done it. I don't believe them.
I know. I know. You have anything you want to add,
Yeah, I just got back. No, I don't have anything to add.
Mr. Supreme?
Negative.
All right, we'll move on to the next one. This one is from CoinTelegraph.com. State senator reports jail pending verdict in cryptocurrency fraud case. A Georgia state senator has reported to jail over allegedly lying about the theft of cryptocurrency mining equipment worth $300,000, The Guardian reported December 27th. Republican Michael Williams, who originally reported the alleged theft in May, made a false police report and gave a false statement, court documents claim. Williams had said servers with a value of $300,000, which had been used to mine unnamed cryptocurrencies, had disappeared from his office premises. Local daily news outlet Atlanta Journal-Constitution reported December 20th. Prosecutors are considering the possibility that the theft never took place, and that last month Williams was indicted by a grand jury on three counts and subsequently handed himself into custody. The full verdict has yet to surface. However, the accused and his attorney await waiting on prosecutors' evidence. Um, I know. What's your take on this?
Yeah, that's a few takes I have on it. Either he's telling the truth and someone did steal it, which means obviously don't tell people how much crypto you have or if you deal with crypto. B, he's lying and he's trying to losses, $300,000 worth of losses of whatever since the crypto market went down. And trying to recoup some losses by lying and say, hey, something was stolen. He's trying to get his money back. C, it said in the last sentence that he was a proponent of um, getting a bill signed dealing with cryptocurrency, and someone like that, and they this unknown person is against cryptocurrency and blockchain, whatever the case may be, and decided to break into his office and steal these miners. So there's three ways that I thought about. Three things I thought about when I read this. For me to say which one. Hello.
Yeah, where?
So what do you think's going on, Mike?
He's probably not the only politician in on this. A lot of these guys are hoarding. I think we covered an article some months ago talking about I think it was either IRS or one of these other agencies were basically saying, you politicians who are in office now, you better start revealing
Mm-hmm.
whether or not you own cryptos, or there's going to be some consequences. Um, these guys are just greedy. You're already making money off the taxpayers' dollar, and you want and you want to mine cryptos.
So let me see if
Like,
I understand what's going on. So you're saying that of course, we don't know conclusively what happened, but you're saying that's assuming that he's. So you're saying that he's mining cryptos, and by reporting that the computers are stolen, then he doesn't have to report anything. Is that what you're saying? So he
that
doesn't
could
have
be
to.
one aspect. On top of, go ahead.
No. Go ahead. You got it. Go ahead.
No, I'm saying that's one aspect.
Okay.
That's one aspect.
Yeah, I'm just trying to
But
break
the
it
other
down.
aspect,
I'm just trying to break it
right?
down so
The
we
other
all
aspect,
understand.
right? So the other aspect is that he can report the losses of over $250,000 in hardware that he's never going to get back because whether it was stolen or it was lost, it's of no use to him, right? Because the market is down. He probably bought it when Bitcoin was high,
Mm-hmm.
and now that Bitcoin has tanked, he's like I got to get out, and it's probably too difficult for him to get out with all that hardware because I think we covered an article Monday where we was talking about crypto mining hardware, in Japan being of little value now because
Right.
there's no
Right.
return on investment.
Right. And that was.
So
Oh, go ahead.
go ahead, go right ahead.
That's what I was thinking because the not only that, but I've seen articles where people are saying mining Bitcoin is not profitable anymore because of the low price. He not he probably saw it as a way to make money. Didn't get out when he should have got out and trying to cover his loss.
So
Like you said.
you're looking at it from the standpoint, okay, you spent this money on this hardware to do this mining, and now the currency has dropped down to a point where you probably can't even recoup your money for the daggone equipment, the
Right.
mining equipment. So okay, so
Right.
report the equipment is stolen.
Right,
Okay.
and the insurance company will write a nice big check for him, right? If it is insured, then the insurance company will write a nice big check for him. That way he can recoup from his Bitcoin losses. But I think, like I said before, we covered an article some months ago where agencies were basically telling these politicians, if you are mining and if you do hold cryptos, like any digital wallets or anything like that, you got to start reporting it, or turn it over or something like that. So this guy is just sleazy. He's from Georgia, so I'm not surprised.
Send comments to Mike V. The comments on the Black Ain't Trust.
Hey, you know what? When we started getting comments like that, we made it.
Okay.
Cream will be the first
I
one.
love Georgia. I love Peaches. Knew a girl named Peaches.
Yeah, but I agree with you, Mike. If they're in surety, he get a nice big check and it's a wash. You know, whatever he lost is wash. And he probably still got the Bitcoin that he mined. So, yeah.
Yeah. Preem, you have anything you want to add to this?
Yeah, I mean, it's no different than the guy who, than the cook or the guy who had a, great idea, made a great burger and thought, his mom liked his burger, dad liked his burger. Well, I'll open up a restaurant. His restaurant fails and he burns the place down. It's just, business venture that goes south and he just, pulled the plug on it. And, but he got greedy, probably, and he just didn't cut his losses and walk away. If he does get found guilty of this thing, then he just got greedy. He just should have, cut his losses and walked away. But he probably figured, hey, I can come up on this too, which is kind of like, if business goes bad and it goes tits up, it goes tits up. You just start again. But greed sometimes just be, we just take someone over. And then another thing, like that last paragraph, because I thought that was interesting, because I think a couple of weeks ago you guys told a story. You guys were talking about the story about that Georgia was going to start accepting the crypto thing for its tax payments. So I think it wasn't going to be the first state to do it. It was going to be like the second or third if it got through. And I clicked through the link to the story, and I think it got passed. It passed one level, and I think it was headed to the next level. But then now it just opens up a can of worms. This guy's in crypto. Maybe he was getting lined up by the crypto guy, because there was some big name crypto guy that was behind that company that was actually going to be the exchange, whatever that's called, the exchange that was going to convert the crypto into money or hold the money into crypto, whatever. So who knows, man? It's politics. It's local politics. So yeah, who knows?
And you're local to this gentleman as well, correct?
Yeah, all the sleeves buckets stay together, Mike. We all know each other down here. So.
Yeah. Well, he did have a Confederate flag, so anyway.
Yeah, I actually sent it to him for his birthday.
That's Mike B. He's all the way in Boston talking all that stuff.
All right, this next one is from newsbtc.com. Japanese internet giant shutter crypto mining operations. Closure of crypto mining hardware production in farms. According to reports in local media, Japan's online retail giant GMO is pulling out of Bitcoin mining hardware industry as hash rates increase while prices fell. Mining competition also intensified, putting the pressure on profitability. In response to this, GMO has decided to withdraw from sales and development of mining equipment, which is now no longer profitable despite hash rate falling a little recently. The report goes on to state that the painful move cost the company 25 billion yen. It aims to continue mining itself and is currently seeking out crypto-friendly nations in Northern Europe with more favorable electricity prices. A cryptocurrency exchange is also in the pipeline, according to translation of the article. Well, Lionel, what's your take on this?
Like I said, this links someone to the last article. Like the price of Bitcoin is going down, so the cost to mine it, meaning the cost you got to pay for the power to run these machines, are more than the price of Bitcoin. Because once you mine once you are rewarded with the privilege of adding a block to Bitcoin's blockchain, Bitcoin right now it's like 12 Bitcoin. But the cost, there's competition. There's other people mining, other people with these machines, these Antminer machines. I think specifically Antminer, other crypto Bitcoin hardware. So which means you got to purchase more to stay competitive, which means your energy bill is going to go up. So you're running all of these machines. Not only are you running machines, you have to keep them cool. So you're running fans and what other air conditioning equipment to keep them cool, because you don't want them to shut down. Because if they shut down, there's a possibility that you got to replace them because they're damaged. So it's a whole setup. So with Bitcoin price declining, our electricity bills is high. The price to mine Bitcoin, the profitability isn't there.
Can you give me, when you say the electric bill is high, can you give us just some general idea? I know it depends on how many computers you have, but
yeah.
So you talking about getting how much per month?
It depends how much hardware you have, but it can cost thousands of dollars. That's why we've read reports of these companies that mine Bitcoin moving to places where there's natural resources of sunlight and hydro plants, things of that nature. But in Japan, there's not a lot of natural resources that will provide you any energy that will offset that electricity bill. So they're continually paying thousands of dollars to run these hardware machines and Bitcoin prices. So they laid off people to save some money. Bitcoin price continued to decline. So now they're shutting down businesses.
Yeah, I'm just thinking about people I know who have solar, and they have their entire roof full of solar panels, and they they barely have enough space on their roof to put the panels required to eliminate their electric bill, and their electric bill might be $200. Now you talking about a thousand or several $1,000s a month, and in the electric bill, solar is not, it won't be able to pay for that.
Yeah, you have
It depends on what you're running.
Yeah,
depends on what you're running. So the average computer that they would use for mining is runs anywhere between 500 to 1,000 watts each. And if you looked at if you're looking at the image in that article, there's probably a couple. Let me see. There's probably a couple of racks set up, and it's probably about 100 computers a rack. So you're talking about anywhere between 20,000 watts, just to run it. You need power. I think I told this story before, but Rackspace, which is a cloud computing company, bought a mall, a defunct mall in Texas, thinking that they were going to utilize the space and load it up with computers so they can do cloud computing. And what they found out was they couldn't get enough power to the mall. There was not enough power aligned in the ground to the malls, and they would have to start building out their own mini facility for power development, for energy development.
So they would need their own. They would need their own power plant, or like a solar farm, or their own personal solar farm or something, because a roof is not going. It's too limiting.
Right. So it costs a lot more money now than what it did before to mine. It's just not worth it. And at least not for Bitcoin, it's not worth it. Now, if you're talking about another currency, that might be different.
And you're right, Mike. That picture is the machines. Those are the machines, and it's next to each other. And those fans, those little black things, those are the fans that come with them. But that room get hot real quick, and so you gotta ventilate it.
Yeah. And a lot of us probably had a machine room or some sort at our job where the air is filtered and all this stuff. And
so I can wrap my head.
Go ahead, Preem.
Oh, so I can wrap my head a little bit more around this, just a little bit more. last week there was a story. There was a guy there. He had his server lined up. He had a kind of like a bootleg hack job. Might call it a rat's nest.
Mm-hmm.
How many watts would you assume that thing is sucking up? You may have said it last week, but I forgot. How many watts do you think that's pulling? What do you think its out of pocket cost? Not for electricity, but just for like the cost of that bad setup was.
He had a rack, right? So he had probably about a dozen computers running.
Mm-hmm.
A dozen computers. One computer eats up 1,000 watts.
Okay. So about 12,000 watts. And how much you think like something like that cost him to set up? You know, he looked like he was just, a local guy, I'm assuming a small operation, until it kind of the price just didn't justify it. But how much you think out of pocket it was for him to buy those servers or those computers?
Probably about 15 grand, 20 grand.
Yeah, because it's the graphics cards that cost much more.
And then
the graphics card is $1,000. A graphics card is $1,000. He had about 4 per computer.
Damn.
Right, and get this. He's probably not even rewarded because the consensus algorithm towards you Bitcoin is biased toward the more power you have, the more power you're putting in to prove that you're doing the work, and therefore you're deserved the right to add a block to Bitcoin blockchain. Is biased toward is proof of work. That's the point. You put in more work per these computers, you get the reward. That picture of the article, compare that to his setup. He's in a mining pool. He's not doing it by himself. Because if he was doing it by himself, he's just wasting the money month after month. So he has to be in a mining pool.
So under that algorithm, so you're saying that the more money you spent through your system, or the more computing power you have in your mining computer farm, the algorithm basically steers the money to the more powerful computer. So the rich get richer.
Right. That's why these mining facilities are companies. They're gathering money in order to scale up to improve the possibility of them receiving rewards at a block to Bitcoin's blockchain. Because
companies like your AMD and your big, those companies, they benefit at some point.
They benefit greatly. That's why AMD stock skyrocketed last year.
Yeah, because people are purchasing their equipment. Because if, let's say, Bitcoin was still $20,000 and you're getting 12 Bitcoin per reward block, that'll cover your energy bill and your employee bill, and you're receiving profit, and you can scale up or do whatever you want to do to improve it more. But that's the reason it's called proof of work. You're putting in a work, and to prove you're putting in the work, your computers are your proof.
And it's actually eating up the environment as well, in terms of putting more heat out into the atmosphere, from an environmental perspective. All right, let's get to the next article. All right, this one is from Forbes.com. Ethereum is soaring, pulling Bitcoin and Ripple with it. Here's why. Ethereum, which has regained its spot as the world's second largest cryptocurrency by market capitalization after recent gains, is soaring today, helping to boost the cryptocurrency market, including Bitcoin and Ripple XRP, as a post-Christmas rally rolls on. Ethereum has climbed some 80% over the past month, adding a further 12% rise over the last 24 hours. As an upcoming so-called hard hard fork pushes up demand for Ethereum's tradable token of Ether. Bitcoin has added some 4% over the last 24 hours, while Ripple, a common name for XRP's tradable token, has climbed 3%. Ripple's last year overtook Ethereum as the world's second largest cryptocurrency on the back of surging interest from established financial services sector, but has failed to hold on to these gains. The hard fork, which usually means a cryptocurrency splits in two, will see Ethereum miner rewards fall from three ether to two, and decrease the block time, making the network faster. The update is set for January 16, and it starts to be a key component of Ethereum's transition from using a proof of work protocol to proof of stake. Cryptocurrency forks do not always mean their value rises, however. I know. What's your take on this?
All right, this is just another log on the fire as to why I'm moving to technical analysis, because the reason he's giving in this article is starting to irritate me that people are doing this. Now he says that because of Ethereum, recent price gains is helping to boost the cryptocurrency market, including Bitcoin and Ripple. That's if the trading pair, in order to buy Bitcoin and Ripple, you have to have Ethereum. That's if the trading pair was there. It's not. So in essence, you're saying because if Ripple was the catalyst of the recent up the crypto market, it was, hey, I see Ethereum moving. Maybe I can put some money in Bitcoin and Ripple, because just because Ethereum's moving, they're going to move too. That's the thinking. That doesn't make sense. Then he says, okay, Ethereum has climbed 8%, 80% of the past month. So as upcoming so-called hard fork pushes up demand for Ethereum's tradable token, Ether. Okay, it's not a token, it's a coin. The difference between, oh man, I feel like a snob. The difference between a token and a coin is a tradable asset that has value, that has its own blockchain. A token is another tradable asset that uses someone else's blockchain. Ethereum's Ether is a coin. I don't understand when people keep saying it's a token. How you doing? Then on top of that, he's saying that the so-called hard fork, this hard fork that's coming, is a code upgrade to help Ethereum perform more transactions than it is now. So he said usually a hard fork is when a coin breaks to two. They're not this sometimes, but not necessarily. It can be just a code. To me, he's just shilling Ethereum. He's just saying, "Hey, Ethereum's going up. Why don't you just join in? Because don't miss the wave." Hey, it's like that, and it's irritating that I have to look at these articles, not because they've been putting on the docket, but these articles all in CCN, all in Ethereum world, and they're just shilling these coins because they boosted up percent. That's why I'm drifting more and more to technical analysis.
Come on over. Come on over. We got room for you.
I mean, it's irritating. He said just because Ethereum went up 5%, that's because Bitcoin and Ripple's going up. That don't make sense. It don't make sense.
I hear you. I mean, it's one world. It's when you look. That's why I just like to look at the chart. You're gonna wait a minute. When it's good, it seems to benefit the entire crypto space. When it's bad, this whole space seems to suffer. So I can't. I don't. It just. I can't. I can't make a logical statement about it other than I just see what it's doing. I don't know why. I don't know why that all of those cryptocurrencies are correlated like that. But maybe it's just a product of them being um, quoted as their price relative to the dollar. I don't. I don't. It's. I can't. I can't make sense of it. But I believe what I see. That's what I like about technical analysis. I don't have to know the answer because we're not going to be smart enough to know the answer. Okay, the people closest to it, you know, the people pulling the strings, they know the answers. But price is truth, as we say in the technical world. We can look at the chart, we can see the correlation, see what all seems to move up at the same time. We can look at the direction of the price trend, and we can look at the volume. We have, two oscillators and tools, and we can see when the trend has reversed. That's that's as much as we really ever going to know for sure. Everything else is, speculation.
Cream, you have anything you want to add to this?
Oh, negative. Nope.
Yeah, I think the crypto space is moving pretty good. This has a nice little run, and and it may not be over, but I do not believe that this is the bottom. I believe we got one good leg down, and that could be. I'll see when we get there. I can't say right now for sure that it is, but it could be. We could have one more leg down, but I'm pretty certain to say that this is not it, or the recent low is the bottom. No, I'm pretty certain that in my opinion, that it's not the bottom.
And then again, what's going to happen? This same is going to write another article and say, "Oh, the reason Ethereum went down is because the hard fork didn't go as planned." And it's like it's over and over and over
Yeah,
and
I
over
mean,
again.
hello, you still there?
Hello, can you hear me? Hello.
I can hear you guys. I can hear you guys.
Okay, Dollar Will, you there? I think you have mic problems. But yeah, this same guy's going to write another article and say, "Oh, the reason Ethereum's price is going down is because the hard fork
Mike.
didn't go as well." Yeah, Dollar Will.
Okay, now, yeah, I wasn't hearing anyone
Can you hear us?
saying that. I'm now say I'm getting a notice saying my network connection is me.
Okay.
Okay.
All right.
No, I was gonna
Next article.
only I can say hold my comment to the next article. The same.
All right. This next article is from CryptoBriefing.com. Can Ethereum still compete? ICO selling plus lackluster DApp usage will follow Ethereum into the new year. No coin is perfect, but Ethereum has more than its share of problems. The ICO laden token has shed 80% of its value since its peak and given up the number two spot to XRP that had to hurt. Now its very mission has been called into question. In a much publicized tweet storm last week, early Bitcoin investor Tur Demeester likened Ethereum to the Yahoo of our day, an unscalable blue chip cryptocurrency. Ethereum is a leading blockchain network and the most active platform for smart contracts, according to consensus data. Most of the leading cryptocurrencies are Ethereum-based tokens, and the network boosts more than 1 million transactions per day. Not bad by 2014 standards, but far behind the latest competitors. The latest bounce doesn't change the fact that the Ethereum project has a lot to prove to the community in 2019 after lasting crisis of confidence that has called the platform's value into question. Ethereum faces an identity crisis. What do you do when much of your identity is tied up in launching ICOs, which have since become taboo? It's an identity crisis that till now no leading cryptocurrency has had to face. Ethereum is still in the first half decade of existence, according to dr.co. Ethereum ETH suffered ICO treasury withdrawals of almost 400,000 ETH this month, the most severe month of withdrawals of the year. They are also noted in noted an 82,000 ETH withdrawn drawdown by Tezos in November. DX. Well, let me just look at this chart real quick. Actually, I'll stop there. Lionel, what's your take on this?
I like the article. I like that he started out by saying, really explaining what Ethereum is and its claim to fame and what it's being used for right now. I like that. Ethereum does have a identity crisis. It's known for being the first crypto to introduce smart contracts, but also last year during the ICO phase, a lot of ICOs, new coins that was trying to come out, only accepted Ethereum as a down payment to receive their coins. They kept the Ethereum. Now, a sell-off occurred throughout the year because there were two main ICOs, fakes, where they got the Ethereum, sold them off for a profit, and ran off with the money. But the other ones that were real, they were using that Ethereum to fund their project. And as the Ethereum went from 1,400 all the way down to the low of $80-something, they sold more and more and more to A, to fund their project and to be paid. That's logical in terms of what, the sell-off of Ethereum. They're the people that really actually track that sell-off. For the dApps, people will say dApps will be one of the ways crypto will gain mainstream adoption, because the decentralized apps kind of is tantamount to when the iPhone came. It was beautiful because it had a touchscreen, but then they said, hey, you can download these apps, and people just went app crazy, having 4-5 pages of apps. It's tantamount to that, and I like that he compared Ethereum to
She.
huh?
She.
Oh, my bad, misspoken. Please send comments to Lionel. She Ethereum to Yahoo, and we all know Yahoo. Right now, Yahoo is really good for Yahoo Finance. Um, Ethereum is looking like Yahoo now, but since it's cold, it can still be upgraded. They are performing these upgrades, sending out these hard forks, so Ethereum can do more transactions per second to get up to the likes of Visa and so forth, and to make Ethereum a better project. So I like the comparison to Yahoo, but Ethereum can change quicker than Yahoo for the better.
Okay, just to keep me focused, you guys keep me clear on this crypto space. That's not my primary thing. Now, but so with Bitcoin, Ethereum is one of the cryptocurrencies that has a strong use case, correct?
Yes.
And one of
Yes,
the
on
one
blockchain.
it has its own blockchain, okay, and Ethereum along with XRP could potentially outpace Bitcoin, correct?
Potentially in the long run, Bitcoin still has that brand power.
So it's smoke and no real. It's smoke. It's smoke, right? It's no Bitcoin. Bitcoin, like you said, is just the brand name. It doesn't have a function as
Right.
strong as say XRP or Ethereum.
As of right now, yes.
Okay, but those are the big three.
Yes, sir.
Okay, all right. I just like to restate that. Just to keep clear on that.
Mm-hmm.
So yeah, I mean, everybody, you guys know where I'm coming from on this. When I'm convinced that the dollar's run is over, then I'll be very interested in crypto. Not until then. When a clue will be when the interest rate hike hike cycle ends, and nobody's saying it's over now. So as long as there's a strong belief that the dollar uh, has an up leg left, that is a threat to any currency that's quoted with the dollar, because that strength is going to be a dead weight on any currency that's paired with it. It's quoted, and it's like when for example, we see Bitcoin / USD. That's the price of Bitcoin relative to the price of the US dollar. So if the dollar is strong and you want to know, well, what's the value of Bitcoin? Well, we quote the value of Bitcoin relative to the US dollar. So if the dollar is strong, that means relative to the dollar, Bitcoin's going to be weaker.
Mm-hmm.
So, but that relationship or that dollar strength is not going to last forever. Not going to, I don't think it will last beyond this year. Okay, but we're just not there yet. I don't think we are. But when that time comes, that'll be a great thing. That time of meaning the dollar continue its downward slide, where we're all convinced that it has resumed its slide. Bitcoin will be all the cryptocurrencies. That'll be a great thing for all the cryptocurrencies. But right at this moment in time, as you were talking about, Mike, in an earlier article, a lot of the other currencies in the world, people are fleeing those other currencies right now, and that trend in the near term is going to continue, and that money is fleeing those other currencies and coming to where the U.S. dollar. So as long as that trend is going to continue, I can't get behind Bitcoin. And I'm not sorry. I'm not. Why do I keep saying Bitcoin? I want to say cryptocurrency. I'm not singling out. I'm chastising myself. I'm not.
Yeah.
I'm trying, because I make that mistake that you guys always correct us on, that there's a difference between Bitcoin and crypto. Bitcoin is a cryptocurrency. There are many cryptocurrencies, but most of them are quoted in U.S. dollar terms. And my opinion is, I have really no interest in any cryptocurrency until the dollar begins or resumes its long-term downward trend. Because that, for me, I'll be very interested in cryptocurrencies at that point.
And Delaware, as you see, you keep saying Bitcoin. That's the brand power Bitcoin has. It's the name.
It's like Xerox. We used to say, instead of photocopy, we would say go Xerox this instead of go photocopy.
Right.
Yeah, you're right, because that's that brand, that Bitcoin brand.
It's strong.
Strong, yeah. And especially for
same
people
thing.
like
You don't search.
You Google.
You Google, correct. That's right. Go Google this, correct. Yeah, yeah, my father likes using what is it, Bing, and I'm like, why? We're on the phone and he's on his computer, I'm on mine, and I'll Google something, and I'm explaining what's on my search results, and he has completely different search results. I'm like, what are you reading? Then we find out that he's using Bing. I'm like, why?
There's some political reasons as to why he probably is doing it, but yeah, let's move on to the next article. This one's from CCN.com. Bitcoin on track to replace gold as dominant store of value, crypto VC. Venture capitalist Luke Kerner says Bitcoin is well on its way to replacing gold as a dominant store of value, nothing that its market cap has already surpassed that of silver. Quote, what Bitcoin has evolved into is a store of value, Kerner told Bloomberg. Today, the main store of value is gold. It's an $8 trillion market. Bitcoin today is a $60 billion. Is around $60 billion, so it has an opportunity to actually replace gold as a dominant store of value. Kerner doubled down on his remarks from August 2018 when he predicted that BTC would supplement gold as the most trusted store of value. Kerner, the founding partner of New York-based Crypto Oracle, said despite the current bear market, crypto would be far more disruptive technology than the internet. Quote, the disruption from that is going to be bigger than the disruption we saw from the internet, Kerner predicted. Bitcoin is kind of the early leader, like the Yahoo of his day, and while it's a massive thing, it's not the thing right now. But in 20 years, BTC and crypto will be off the charts, Kerner claimed. We really believe that in 20 years, Bitcoin will have created trillions of dollars in value, similar to how the internet has, he said. We're at the very beginning today. When asked why Bitcoin price has plunged from its record high of $19,500 last December, Kerner said it's because the market got ahead of itself due to unchecked capitalism. Kerner said virtual currencies and blockchain would eventually prove that they are far more revolutionary than first imagined. I don't want to get into the
Yeah,
Ponzi scheme.
yeah. I think the headline is hilarious. Let's read that again.
You go right.
Bitcoin,
Yeah, you go right ahead and tear it apart.
Bitcoin on track to replace gold. Okay. All right. For the last year, gold. Now everybody knows I'm on this. My theme song is the dollar's going higher. I don't trust this run up in gold, but the fact is, gold has been strong over the last year. How's Bitcoin been doing over the last year? So if Bitcoin, everybody knows that Bitcoin has tanked over the last year, gold has not. So how is it that Bitcoin is a store of value? The market has shown more love for gold in the last year than Bitcoin. So I don't understand that. I don't get where he where he comes off with that. Gold has been around a mighty long time. It's not going anywhere. I think when the dollar starts to spiral down, and it will, it's no doubt about it. We're just not there yet. I believe both gold and crypto will benefit from that. But if I had to bet on one, I'm going with gold. You know, if I had to choose one, but I don't have to choose one, I'm going to invest in both. But if you make me think, I'm going with gold.
Well, yeah, I agree with Dollar Will in terms of the title is more catching. It's one of those read baits. Instead of clickbait, you got read bait. It would serve its purpose better if crypto was in a major bull run instead of now. So, yeah, that's what I think about it.
Frame.
Negative.
Yeah, it's like, what chart was he looking at?
He probably made those statements. He probably made those statements a while ago, and they just picking up on it, or just decided to publish it.
He made it. Yeah, he made those comments in August 2018. But so they're just reading it back to him now.
Yeah.
Oh, they trying to put him on the spot. Oh, that's cruel.
Right.
Oh, that's cruel. So they're like, oh, remember when you said this? Oh man,
right.
That's sad.
Well, you know that happens in the manosphere too. So I don't see that as a big deal. But it is relevant because people who invested into this, you know, it lost a lot of money, you know, the last quarter. So I would have a conversation with people who make those comments as well. That, oh well, this is great, you know, you should jump into it. And I think, you know, your SOL because it tanked below 4,100, like Dollar Will predicted in the summertime, and now your your life savings, your 401k, your pension is gone because you done blew it on you blew it all on cryptos.
Yeah, I mean, hey, I get it wrong too. Okay, so it's just this is tough because people. That's why you have to act when you're making these predictions, projections. I don't want to say predictions, projections. You have to give a time frame because what he's saying about Bitcoin, going to be a storehouse of value in the long run, I agree. It's highly probable that it is. Look at the market cap. Like he said, it's already there. And it's people are watching this thing. There's no reason to believe that the number of people investing in Bitcoin once it hits bottom, there's no reason to believe that the number of people won't be investing in it won't be greater than the number of people that drove the price up to 20,000. So I think he's right. So it's just kind of tough that when you come out and you make a statement like that, you have to, for political reasons, you have to time when you make a comment like he did, and that bold comment, because then somebody's going to come back 3-6 months later and say, "What happened? I thought you said X, Y, and Z." That's why when people make those fundamental arguments, they need to look at it from a technical analysis perspective so that they know when to come out and make a statement like that.
He's right, but he's right just not now.
Correct.
He's about 5 years too early.
Yeah, and then just the whole implication that Bitcoin's gonna overtake gold. We're just not even gonna value gold anymore because we're gonna have Bitcoin. That's silly.
Yeah, it is.
Maybe for the people who don't have access to gold, right? Will probably have access to some form of crypto. Maybe not Bitcoin. Maybe it might be Ethereum. Might be XRP. As stored value assets.
Well, the reason I hear you, but I guess I'm throwing out the argument about the physical Bitcoin being more practical than, say, physical gold. I'm throwing that argument out because when gold ran up to, what was it, 2,000-3,000, whatever the high of it was in 2011, the biggest instrument on Wall Street for gold was an ETF, and that was GLD. There was more money in GLD, and that's just like an index. Okay, there was more money in GLD invested in that ETF than any gold company, any individual company. People were buying the GLD and not buying the real gold. So all that to say, we're quite comfortable with proxies or fiat. We're quite comfortable with that.
So Dollar, you being a technical guy, you stated that this Bitcoin thing is going to go down, but in the long term it's going to go up. Is that just, obviously you're not looking at it from a fundamental standpoint? Is that just from the basic, hey, it can only go down so low? Your whole thing, if it's going up, it's going to come down at some time. So is it the reverse of that? If it's going down, it's going to go up sometime, irrespective of the store value argument, because that's a fundamental argument and you don't pay attention to the fundamentals.
I'm gonna say in the essence of what your question is, then the short answer is yes. What you're asking is yes. Now, to be more specific, when I make that statement, I'm making it I'm mindful of the trend of the dollar since like 1970. Okay, since we came off the gold standard. The dollar, if you look at that would be what, a 48-year, almost a 50-year chart. If you look at that chart, that trend for the dollar has essentially been going down. Okay, and that trend is going to resume. It's just that it can only, although the dominant direction of the dollar trend is down, and it's designed to do that. Okay, it's designed to go down. Okay, it just went down too far. and too far too fast in 2011. It was in it, and we're doing a slight correction or recovery for it, but that's going to resume also. And when that happens, that will make Bitcoin or things that move counter to the dollar or that are quoted, things that instruments that where their value is quoted relative to the dollar, those such instruments will be more attractive at that time. That's what I'm speaking to, the relationship between the dollar and Bitcoin and the dollar and energy and metals. But right now, it's a season for the dollar. And I'm speaking in long term. Now I'm speaking from 2011 to now. This correction part, this rebound part for the dollar. I'm speaking just to that. That rebound, I do not believe is over, but it will be over. And then the dominant trend will resume, and that is dollar goes down, euro goes up, Swiss franc goes up. All these other currencies around the world, most of the other currencies will go up. And all this talk about fleeing the dollar, as their currency, as their international currency for trade, all that's going to go away. That's my opinion. I think it's just going to go away.
Thank you.
All right, next article is from cryptobriefing.com. What is electronium? Is that saying correctly, Lionel?
Electronium.
Electronium, correct. Introduction to ETN token. Electronium is a blockchain-based payment platform designed specifically for use on mobile devices like smartphones. It's claimed to be the first know your customer and anti-money laundering compliant cryptocurrency. ETN, Electronium's native crypto, is virtually mined using mobile devices. The cryptocurrency has a massively loyal and committed following. Its marketing strategy has tended toward virality, which has gained it over 2.7 million registered users, January 2019, as well as an impressive 129,000 Twitter followers. The project has attracted 143,000 Facebook users. And interesting because Facebook is not a platform not known for crypto projects. Many don't even have a Facebook page. This could illustrate that there is a strong following beyond crypto devotees, which would, of course, be exactly what the team would want to see. Of course, 2.7 million registered users does not measure active use. Just as Bitcoin's 22 million wallets doesn't suggest that 22 million people are using Bitcoin today, but its remarkably strong performance and improves the power of integrating the major players like Google's Play Store. Lionel, what's your take on this whole entire project?
We went over this a couple months ago when I think it was a Forbes article that stated how Electronium is being used as not a store of value, but sending money from people from peer-to-peer using cell phones. And you can also mine Electronium from your cell phone. So people were sending each other money through their cell phone Electronium. First, as the article said, Electronium was used for in-game purchases, in-game currencies for mobile devices. Then they branched out to more other projects. The projects now focus on partnerships, including telecommunications. I'm trying to scroll down. Telecommunication payments between Behemoth e-commerce company, B Media. It's partnership with Mobile Streams PLC gaming platform. So it has a use case. It implements the KYC anti-money laundering rules that a lot of government regulations want cryptos to abide by. So they're ahead of the game on that front. It's was 18 cents. Also, down in the article, it states how it's trying to it's picking it said it's picking fights. It's competing with the likes of Mise Go. Mise Go is similar to Ethereum. Um, Mise Go is to Ethereum how how am I trying to say this? Mise Go is like an Ethereum. Hard fork comes out that makes it scale up to more transactions. Mise Go will receive the same thing. So they're being competitive to Mise Go, which means they are trying to fight with the big boys in essence, if you follow what I'm saying. Then Pundi X has a proof of sale devices that's being proliferated across Latin America. I know I seen a video in Africa, go to the counter and pay using their devices. They also released a cell phone, I believe. I think that was them also. So they're trying to compete with a lot of big boys, and they're doing really well in terms of what they're doing. Of course, their price has fallen because everything else is falling. But yeah, I would say please read the article for it. It's not if you're listening to this article is not technical. It's just telling what.
Very long.
Yeah, it's long and it's really telling you what they're doing. It's giving you a lot of information on what they're doing of what Electronium is doing. It's in its blockchain. It's interesting. In-game payments. I don't want to say the pun, but that's that could be used.
Yeah, see, this is the part about I'm not expecting y'all to get my mind straight on this tonight, but it's just all these various coins and tokens and that you can only use in a like a small universe, unless or not or what you got. You got all these different tokens and coins where I guess I can trade them for other cryptocurrencies if I need to, right?
Yeah. Now I agree. Well, I agree with what you're saying, and I understand what you're saying. That's a problem. That you have these separate blockchains meant to be used for separate things.
It's like walking around with a wallet of 25 different with the money from 25 different countries in your wallet.
Right.
And like, what the heck is okay? This country only want. Okay, I'm going to the Peruvian restaurant. Let me go and pull out the Peruvian coin and pay them. And then I'm going in to get me some buffalo wings. And that's what they want.
And I understand where you're coming from.
Yeah.
There are I'm going to say projects instead of saying coins or cryptos. There are projects out there that will allow you to. Their blockchain is built specifically to work with different blockchains, so you can trade in between, or as I say, atomic swap from Bitcoin to Ethereum to Electronium to so you can swap in between. With ease instead of holding, as you say, 20 different currencies in your wallet.
So, by that example, you're saying the traditional relationship of a traditional function of Bitcoin as the conversion currency. Maybe I'm not saying it right. It's you go from one. If you want to get from Ethereum to XRP or cryptocurrency A to cryptocurrency B, you go by way of Bitcoin. You go to Bitcoin before you get to the other thing. So you're saying that function that may prevail, and we may still be doing it. I thought we were going to be able to go from one cryptocurrency directly to the other one without going through Bitcoin.
Well, yeah, that's what I said. The example I said was without Bitcoin.
Oh, okay.
Yeah, that is just an atomic swap. You go from, like, I use Omise Go and Electronium. If you got 1,000 Electronium, you can just swap that immediately to however many Omise Go that equals to, without using or going through Ethereum.
I got you.
Yeah.
So, for example, I could be online playing fantasy football, and
Mhm.
I could have a coin for my fantasy football space. In fact, for all practical purposes, it could be a coin right now. They just have a balance up there, and they quote it in dollar terms. I mean, they could be calling it, 25 frog legs for all, and
Mhm.
it's one frog leg of play. But when you leave their space, I can convert that currency, that cryptocurrency, to some other cryptocurrency or to the US dollar.
Correct.
Gotcha. Okay.
Yeah.
And now
And
people.
I
Go ahead,
go
Mike.
right ahead, Preem.
I was going to ask. I said, so, and people are gonna go through these additional steps of work that they aren't doing right now, with the on with the currency. To what benefit, or for what gain, or for what benefit ultimately?
I I don't think a lot of people are going to be in the space that we're in, that we're talking about in crypto. But for those who will, this to them, it will be easier for them to just atomic swap instead of going to. Reason I say that is because people who want to invest, well, people who will hold these coins more than likely are going to be investors, which means outside of having to have them, if you want to work with the fantasy football team, and you have to have this, so you'll convert your USD to that coin. But in my opinion, I who will hold these different type of coins are going to be investors first, and second, whoever uh, I'm going to say shop at that specific platform, such as I will say the fantasy football, they're going to be familiar with that coin, and then they're just going to swap in and out of that coin and their USD there, or
Right.
then go ahead.
Now,
And, and, and
Lionel, you know where we already do this? I'm sorry, Preem. Check this out, Preem. Help me with this, Lionel. We already do it. I just thinking about when we go, when we used to go to Atlantic City or Las Vegas, you have the coins.
Oh yeah, yeah, you're right.
We already do it, and we're not thrown off. We know the relative value of that coin to US dollar, and when we're in the universe of that casino, we know how much currency we have. And when we're ready to go into the big world, we go to the window and we exchange those Vegas coins for for fiat US dollar. And then we go out into the world and use the more universal currency.
You're right. I didn't even think about that.
I
yeah,
just thought of it.
that is a great point. And then if all things are being the same, because if you go from, if you get a chip at the Bellagio, you take it to the window, they're going to give you the exact same face value on that chip back to you, USDA. You take it to another casino, they're going to go ahead and swap it out for their whole coin, but you can't use those coins in those two places. But is that the rub on crypto? Is that between the time I get it and put it in my pocket, between the time it gets in my hand and I put it in my pocket, well, the virtual pocket, virtual wallet, or whatever, the value could fluctuate. The buying power of it, the store
Right.
value of it could fluctuate. Is that the rub? Is that a legitimate rub on it? Like, now, unlike the metaphor or the analogy that Dalamu was using with the chips, because the value of that chip is the value of that chip is the value of that chip. regardless of where it goes in between a dollar, it's still going to remain whatever the value of that chip is. Is that the rub on crypto? Is that value could fluctuate on that one single coin, on
But
just
check,
that one single
but
coin?
check this out, Preem. The value of the U.S. dollar is always changing too.
Yeah, yeah, yeah.
We don't think
But
of it that way because we're holding that paper in our hand. We think that we have captured the value because we're holding it real tight. That thing is moving. That value is moving while we're holding it in our hand.
okay, I will say this: if before I walk into the Bellagio, I pass a McDonald's and Big Mac is $5. When I go into the casinos and do that little thing, exchange chips, get dollars, change chips, get dollars, and walk out of there with $5, that $5 is still going to give me that same Big Mac, right? Or that the hamburger. So that value is still there.
Yeah,
It hasn't changed.
it
Now
doesn't
maybe
change that
over a
much.
year period of time, or or a month, it's gonna $5. It'll go up or down, whatever.
Yeah,
That happens.
it's always changing. But you're right, it's not changing so much to the degree that you can't still buy that hamburger. You can still buy that hamburger. It's moving fractions of a penny, and that movement is not going to stop you from having the value you perceived of it to have because you know how much that hamburger is.
And
So
and
you're right.
And then so the same thing be said like a $5 worth of Bitcoin. Let's that may give you 100,000% of a single coin, but can that still be said the same like I know about Bitcoin that $5 today buying power store value is going to be $5 2 days from now?
Oh,
Plex, you got okay.
um, I right now, I don't know specifically, but I will say as the crypto market matures, the price volatility will become less and less. But as of right now, I can't answer that.
It,
I want to throw one other thing out before saying hello to anti gravity and uh, complex design, aka Ulysses. um, the just kind of your question, Preem, that started this round of the discussion was like right on helping those of us that don't know as much about this as Lionel and Mike and Ulysses and anti gravity. Okay, uh, when we're using that coin in the hotel in the casino, that coin is it's like a brand. Also, it's the currency of that casino and it keeps us there. It really kind of functions to keep. Maybe we spend a little more money while we're holding the currency of that casino, just because we got to go to the trip, make that trip to the window to convert it back to dollars. So that's back to your original question, Prima. Why go through all this? What's the benefit of it? Because I'm sure those hotels benefit by giving you those tokens. I'm sure that uh, it's that much harder for you to leave that hotel and go across the street and buy that hamburger because you got to go to that window first. That might make you spin that wheel one more time.
just one more roll.
Just one more again, right?
Yeah, as long as these new startups are creating blockchains, they're gonna add a currency to go with it, a crypto to go with it. That's just the nature of blockchain development.
Yeah, well, I understood Pre's question is, are people going to bother? Are they going to want to go through the extra trouble to deal with the nuisance factor of dealing with all these additional coins? I'm saying yes because we already deal with if it's worth it. If we are attracted to the underlying, the product or the experience, yes.
Well, keep in mind that we covered an article quite a few times on Mastercard, Visa, and American Express. you know, coming up with patents for blockchain on their networks and utilizing cryptocurrencies within their networks and not having to worry about it. So if you did have a cryptocurrency and you wanted to use your point of sale system and it accepted MasterCard, Visa, or American Express, you're basically just sliding your card in there, and it's you're not even going to see it. It's going to happen behind the scenes anyways.
Yeah, I remember that.
Right, but but we were talking about when you start talking about, you know, this gaming system, they got their own coin, and you know, their coin may not be big enough for MasterCard and Visa to care about. It may not even be recognized on their wallet.
And you know, and to that point, what I absolutely know is going to happen. And again, I don't claim to know crypto, but I just you know, if you open this thing up on the point that everybody's having their coin, anybody who has an audience, it would behoove them, if that's the right way to pronounce it, for them to go ahead and crank their own crypto out to collect fiat in return for kicking out their own branded crypto. You know, LeBron could kick out of crypto. I mean, he's one of the bigger names, but would it would take someone as big as him to go ahead and do it? I mean, anybody could do it if it's.
Yeah, but who's gonna mine? Who's gonna mine for it?
So now maybe that right there is an industry in and of itself. That's a little hodgepodge industry where someone say, hey, if you got the brand, if you have the influence, you got 100,000. If you're Kylie Jenner or whoever that Jenner is, that's got 1 million plus followers or whatever, we'll mine your shit for you for a piece of the action. That's a smart move right there. That's a win-win.
What kind of action talking about with Kylie? Let me move on to the next article. Hey, what's going on, Anti-Gravity?
Hold on, Mike.
Let me move on to the next article.
Mike, can I just ask you one other question? I know you want more, but this article you just read was about mobile mining. So that means when we're charging our phone, we can be mining.
Yeah, that's an ant miner, right? Lino?
Yeah. The purpose. Yeah, you just it just mines in the background.
Wow, Anti-Grav, did you have something on you wanted to say on this?
Yeah, no, just I agree with you guys because I think even Disney World has their own currency when you're in Orlando.
Oh, okay.
Yeah, they have their own tokens.
Thanks, Mike. That's it.
All right, this is the last article. Let me hit this, and then we'll have open mic. Oh, come on, man.
It's been a good hangout so far.
My browser is frozen up. Let me give me about 30 seconds so I can.
Yeah.
He doesn't have a Macintosh, y'all. Just give him time.
Oh.
Give him time.
Hey, this has been a good hangout so far. Yeah. It's been pretty cool, man. Bunch of snobs hanging out, you know, shooting the dust.
Yeah.
Yeah, that's how we do.
We need a beer. Our own brand. We need like a snob brand or something. Gotta come up with a name.
Like St. Ides?
That was never my thing. That wasn't one. But we need a. I think if we get Ulysses and Preem on it, Ulysses can come up with it. Preem can market the hell out of it.
Yeah,
we can make it work.
All right, this last article is from Bloomberg.
The drink of high-performing capitalists.
This last article is from Bloomberg.com. Tesla stock on blockchain offers hint of where cryptocurrencies are heading. A digital exchange opening next week will enable investors to trade in companies including Apple Incorporated, Facebook Incorporated, Tesla Incorporated outside of the U.S. even when the stock markets are closed. DX Exchange, which has offices in Estonia and Israel, will offer digital tokens based on share of 10 NASDAQ-listed companies with plans to expand to the New York Stock Exchange as well as Tokyo and Hong Kong. Each digital security is backed by one regular share, and holders will be entitled to the same cash dividends, even though companies themselves aren't involved. The exchanges The exchange's virtual stock offers will provide a test of investors' appetite for products that seek to improve upon mainstream financial markets by using technology from the world of cryptocurrencies. DX will offer digital stocks or tokens based on actual shares bought and held by partner NPS Marketplace Securities Limited. The tokens will be based on the Ethereum network, with the network corresponding to demand on the digital on DX exchange. Digital stocks could hold advantages over traditional shares because they can be traded even when exchanges are closed, and traders can choose to buy functions of a share. They could they could also give foreign investors the ability to buy and sell U.S. shares they might otherwise struggle to access. Even though even though U.S. regulators oversee trading of DX initial roster of stocks, Chief Executive Officer Daniel uh, Skaronsky said he doesn't need permission from the Americans to offer this service because DX doesn't operate there. The company says it's licensed by Estonian Financial Intelligence Unit with full authorization to operate in the European Union. Quote, we saw a huge market opportunity in tokenizing existing securities, the CEO said by email. We, be- quote, we believe that this is the beginning of the traditional markets merge with blockchain technology. This is going to open a whole new world of trading securities, old and new alike. The U.S. Securities and Exchange Commission, which regulates trading of U.S. stocks, declined to comment. What do you guys think of this?
This is amazing.
We'll start with Dollar Quo.
Oh, go ahead, Dollar.
I think this is transformative, man. It depends on how big the volume, the how much money. All right, I okay. Right now, currencies. I'm talking not crypto. I'm just talking currencies in general, like dollar, franc, euro, so on. They're traded 24 hours a day. The except for, let's see, it closes Friday evening, and the market opens Sunday evening, and so it trades from Sunday evening to Friday evening. It doesn't close at 5 p.m. It's 24 hours, Sunday to Friday. If Apple and the large companies that people care about with the large market cap leaders, they're generating a lot of cash flow in the form of these tokens. I think that's Wall Street not gonna let that happen. They're gonna treat this experiment as the way that corporate America treats an upstart company. They're gonna say, okay, you did the R&D for us. You showed that there's demand for this, and I think what will happen is Wall Street will just be 24 hours. I don't see this experiment working in Wall Street just continuing to ring the bell every day at 4 o'clock and close.
Hey, this is transformative. This is game changing. This is why we come here every week like clockwork and preach the sermon to get involved in this fourth and if I can take my crypto and change it for American stock, and still receive the dividends. Oh man. And it's 24 hours and I'm familiar with it because it's on a crypto type exchange. So that will expose me to the traditional world. That will give more capital to the traditional world. Bridge stock market with the crypto stock market and making like a super stock market. Apologize for the bad description. This is transformative. Now, the only thing that draws me back a little is you don't own the stock. I don't own Apple. I don't own Facebook or Tesla. I own a representation through this Securities and Exchange Commission are not commenting. Now, I agree with you, Dollar Will, when you say if this works, then Wall Street will not sit idly by. They'll get into this. But to know that this is starting and the potential of this happening is great for me. And this will give the traditional stock exchange a lot more liquidity, a lot more funding, a lot more money. Yes, I agree with this.
It's risky. Can you imagine putting instead of like putting your money in your checking account, you just go buy you some Apple stock, and whenever you traveling across the world, you get where you're going, the market's still open, you just go sell some shares, and you just treat it like a checking account or Western Union all in one.
Direct deposit.
Yeah, with the risk though, I mean, it could go up, it could go down.
Yeah,
Um,
because you're going to expose the traditional stock exchange to that volatility too. Well, it could wane, but there'll still be a little volatility.
Man, okay, right. We're already trading like currencies 24 hours. We're going to be trading. It all comes down to how much money it attracts.
This is wild.
So did this say? I mean, did this say what type of crypto or which crypto that we're going to use, or they're going to make their own crypto?
Oh, I forgot to mention. This is another log for Ethereum. It's going to be based on Ethereum's blockchain, which means it's going to make Ethereum's blockchain even more important. Which means to trade on chain, you have to trade with the Ether token. Which means it's going to have the Ether token be more profitable, be more high in value. God, man, boy, we good, ain't we? High fives to everybody.
we have crypto deacon line out.
Right. You
But
better
go ahead.
he better chill out. It'll be like that, the other crypto pastor, proselytize, and the value goes down. It's like, where's Lionel?
But I have to say, this is a smart workaround. It kind of addresses the two major problems with cryptos, which is stability issues and then the liquidity. Actually, liquidity is not as big of an issue, but it also addresses that. Where before they were trying to figure out a way to peg it to regular, currencies, but in a way they're doing this by kind of like on the back end through the stocks, which are backed by the currencies.
So now, oh man, I forgot the name of it. The process, it might be called buying on margins, or where you borrow a stock at a certain price, and then
Margin.
yeah, I think that's it. You borrow at a certain price, and then when you give it back, if the price is lower or higher than what you borrowed it at.
Oh no, you talking about
Yeah, that's not margin. It's
You talking about shorting?
Yeah, shorting.
Yeah, sure. Okay, sure. So I'm not saying this is that, but okay, so that whole process comes to mind, and I'm like thinking, okay, so if I use my fiat, I buy Ethereum. Ethereum is at value whatever X. I use that Ethereum to buy Apple stock. Apple stock shoots up 150 it shoots up 50%. The Ethereum token that I bought with my fiat to buy that Apple stock goes down 50%. I decide I want to cash out my Apple stock. How does that work now? I know it's going to work, but how does that work now? Because the token that I use to buy it is, so if I get would I just be making money both ways then? Because if do I have to go back through my token because the value of my token has gone down? So, or have I lost money in my token? No, I made money with that token.
I think you hit on another factor in this. Yeah, I wasn't looking at that because I'm just assuming that the value of the Ethereum token would be comparable to the dollar, and that's a bad assumption because you would have to factor that in. That would be a part of the equation.
So you mean you all saying you all have to factor a stability token, a stable coin will have to be factored in
Well, I mean, currencies swing overnight or swing all the time. Like the dollar is swinging as a result of and these cryptos, we see the volatility and how they swing. And so now you got Apple doing its thing too, you know. And so you have to figure out where the value proposition is. You had, it's a tech. Of course, I say it's a technical thing. You have to look at it on the charts. It's going to be lots of disagreement about where the value is. What's the good price? What's a price representing good value? And that's what will make a market.
Also, isn't it global? I don't know if I misheard that, but they were going to open offices. I think it said in Hong Kong and Tokyo and Germany and the UK. Is that correct? As well as the US?
Yeah.
Yes. No, not the U.S.
Oh, no US?
I think that because I think that was the whole point, right? The Security and Exchange Commission wouldn't approve of something like this, so they're operating outside the U.S., so it wouldn't matter what the SEC says.
Now,
Oh, okay, right.
now take this. Add these logs to the fire. Ethereum is switching from a proof of work to a proof of stake platform algorithm, consensus algorithm, which means you have to have a certain number of Ethereum to start receiving rewards. Now you can take your rewards and still, oh man, we're not financial advisors. You can lose and will lose money, but I can take my rewards and invest into Tesla. Every time I get rewards, and on top of that, it's on a blockchain, which means there is a continuous record of your transactions, which means whenever you need to pay taxes, you can just simply print out your transaction log and give it to in order to do your taxes. It's a ledger. That's what blockchain is, a ledger. And that makes you recording, and it keeps track of your transactions.
So basically, Quicken and all this accounting software, they're going to have like massive updates.
Yes. So you don't have to say,
Well, they're out of business for the most part.
Yeah. So you don't have to say, well, I need to find this receipt of when I traded Ethereum to Facebook. I need to find that transaction. You ain't got to call them up and call up DX.exchange and say, yeah, do you got my records? But no, it's your transactions. It's your ledger.
Right. I think we won't actually know how it's going to play out until it happens and we see how it plays out.
Yeah.
But if there's money to be made, someone will do the arbitrage. So,
yeah.
And no one's going to leave any money on the table. So if there's any kind of inefficiencies, someone's going to take advantage of it, and hopefully that equalizes the market.
And if other people around the world are taking advantage of the arbitrage, and the SEC doesn't want Americans, U.S. citizens, to participate in it, there's going to be pressure. Massive pressure.
I mean, obviously, you're going to see a lot of people start to, get dual citizenship and visas to go other places and set up shop and get involved if they can.
Mm-hmm.
Go to walk to Canada, or Mexico,
Yeah.
Yeah, Wall Street will do everything it can to hold on to the power that it has. So either a lot of this cryptocurrency stuff is going to get swallowed up by Wall Street, or there's going to have to be a coexistence, or it's going to dominate, or it's going to be like it's a new Wall Street, with bases in crypto.
Mm-hmm.
I'm with the former. We know what whales do. Okay.
This is open mic, so we could bring up anything. You guys want to talk about Apple stock, or Cortez and her comments about taxation?
Oh, did you guys already speak about that?
No, we haven't touched on it.
Okay, you want to start that off, Preem? You started the email for that one.
Where do I start? Yeah, she's got an interview coming up this Sunday to where she's gonna, she's proposing something for a Green Deal to raise the taxes to like 82% or 70% or something like that in New York.
Mhm. I feel bad for Paul Bryant.
I guess it kind of depends on how it's done. If it's going to go back to what it was kind of like in the 50s and 60s and 70s, it's going to have the tax brackets will have to be expanded, and then it'll have to be staggered amounts. So someone who's making like 30,000 isn't going to be paying 80% on all of the income they earned. Is going to be uh, higher brackets, income brackets.
I mean, yeah,
I have one article.
I'm sorry.
Go
Go
ahead,
ahead.
finish, Frame. I'll bring up.
Yeah, I
I'll
mean,
go ahead, finish. I'll bring up my article.
yeah, I mean, I would just, I would love to, I would love to see her go ahead and try, um, or anybody for that case, to go ahead and try it out, and make it work over an extended period of time, and if it proves itself out, people will go ahead and adapt it. But so far, um, it hasn't.
All right, I just want to bring up this quick article. CNBC.com. Shares of Boeing and AMD will rise over 50% over next 3 years. Tech investor predicts. Uh, Let me read the caption. Not the caption, the first paragraph. Expect shares of Boeing and Advanced Micro Devices (AMD) to rise 50% within the next 3 years. Tech investor Paul Meeks told CNBC on Friday, acknowledging that Boeing is not a tech play. It's not a tech play. The lead portfolio manager at the wireless fund said the company has a very quote very interesting services business that is a big catalyst. Boeing has quote Boeing has been slashed recently because of its ties to China, Meek said on Closing Bell. But I think over time in commercial aviation, it's going to be very hard to avoid, even for the Chinese and uh, oligopolists. Um, Shares of Boeing hit 52 weeks, $400 in October. They dropped during the late 2018 sell-off, closing up to closing up about 9% for the year at $322.50. Meeks also likes AMD, it to Intel, which he called the kingpin of PCs in the 1980s and 90s. He predicts AMD will quote take some share in servers in data centers and also quote take some share in gaming systems from Nvidia. Quote AMD will never become a household name like Intel or even like Boeing, but you're going to hear a lot more from it, he said. AMD stock jumped more than 70% last year, closing at $18.46. It hit a high of $34.14 in September. So I talked about AMD before in this hangout, and I've kind of been beating the war drum on this. And when I talked about it, it was at $18 or less than $18, and then it shot up to the 52-week high of $34.14. It's going to if he's predicting that it's going to jump 50% over the next 3 years, and which is what I've been saying all along. You'd be missing out if you don't invest into AMD now. Um, Boeing, I didn't have any idea about that, but I just wanted to really focus on AMD. What do you guys think about this?
I think you have the fundamental story. I trust your perspective. You see how AMD has positioned itself. You got my attention when you talk about What I like, okay, you talk about the two tech things you talk about, the stock plays that interest me is when you talk about Amazon and their web services, Amazon Web Services. But what I'm interested in more so is when you talk about AMD, because that's a pure play. It's in one industry. It's great when times favor that industry, but it's not so great when the stock is going down or the industry is under pressure. And I don't think it's the right time. But when is the right time? This is when you write down those these strong stories, about companies that's positioned to be the next Titan. You know, you write that down, and when the time comes to where the stock prices have like really been washed out and everybody thrown in the towel, that's now you know what to buy. So you can use the technicals to help you figure out when to buy, but you get this information from people that work in the industry, like Mike and he's and the other brothers and so on here that work in IT. They know what the companies are buying. They see how that budget is being allocated, and you take that information and write it down so you know what to buy.
Lionel? I think Lionel dropped off. Yeah, Lionel's gone. Yeah, I agree with Dollar Will. But to my original point was that AMD is one stock that has been slept on for a long time. I think in 2015 or 2014 it was down to like $1.75 or something like that per share, and now it has ballooned up to where it is right now, and it's potentially going to be even higher, but later this year with some of the new reports coming out this week about major partnerships with blockchain and cloud computing. So that's where we are right now. I don't foresee AMD going back down to $1.75 anytime soon. They're in a very high run over the next 4 quarters.
So what's the story with Boeing then? Is there more possibility of more wars, or well, what's up with that?
Maybe the partnerships with China.
In what kind of partnerships? In terms of aviation or other areas?
Technological partnerships. Just because Boeing does more than just build airplanes, right? There's all types of systems that are involved and things like that, manufacturing processes and things like that that are at stake.
Yeah, Mike. Let's see. I'm peeking at yeah, this the chart for A and D is kind of it's challenging to read. Okay, it's very difficult because it's a big sideways channel. But if it made a new low relative to, let me see, what am I talking about? When did it make its recent low? What was that? Was that the 26? No. October the 30th. The low was 1619 for AMD. And then December 26th, it was 1603. If this thing if it breaks below that 1603, this thing could go to $6.
For a low.
It could. Yes, it could go
Yes.
to in that $5 to $6 window. I'm not saying it will. It could. So it's just it's a dangerous time for that sector. And if it goes down there, oh man, this would be a beautiful, beautiful purchase. You know, but
Yeah.
that's the
If
part that's crazy about the market. Great companies. I mean, you know, bad things happen to great companies. You know, I mean, when that sector of the economy turns down, I'm gonna try to bring this chart up because I'm looking at it while we talk. It's just easier for me to. Can you guys see this?
no, we
Can you see
can't.
it? Okay. I don't know why. It's very simple. Just click. Why am I clicking the wrong thing? Start screen share. Duh. Yeah, that's right. Act like I got a Mac here. Can you see it?
Yes.
Okay. All right. Let me go back out. I like looking at the bigger. I don't like all them little candles. It's too confusing. Now, I'm looking on a monthly chart. This big sideways movement. Remember I said prices go on an ABC pattern. Usually the retrace is up to the 50% line. It didn't quite make it. It doesn't have to exactly go. It's just, you know, fuzzy logic. If this price continues down, it could go this low. Generally, this is fuzzy. It doesn't have to. None of this is exact. But with this stochastic going down on the monthly, and where we are in a bigger cycle, I wouldn't trust it. So I would be looking for even these oscillators. We're talking about a correction in the big markets of like almost like an 80, 90 year trend. So a lot of these oscillators are going to even look weird. So for something like this, AMD would have to break this trend line for me. That's what it would have to do. Okay, but I'm of the mind that this whole sector is going to be hurting. But at some point, it will be a great buy. Is AMD? Go ahead, Mike.
No, go right ahead. I'll go after you.
Okay, is AMD the? Let's see. If all of the so this AMD is a semiconductor stock, right? It's a specialized semiconductor, right? So it concentrates mostly what on servers.
No, it's an x86, so it's a desktop computing is their bread and butter, but server computing is going to be their bread and butter going forward.
So that represents a growth area for them. They're going to be entering a new market. It's going to be like new revenue coming in for them.
It's always been their market, but it has it is, but it's always been their market, but they haven't had the ability to penetrate because they haven't had a competing product. Now they have a very competitive product, and it's going to be very competitive over the next 8 quarters.
So
displacing Intel. Intel is the giant in that area, but they're not. They don't have a competitive product to AMD's product now.
Now here's the confusing part between the fundamental and the technical. Now you saying over the next 8 quarters, well, Intel and AMD, they still going to be selling computers. They're still going to be competing for that market share, even as the stock market goes through a correction. AMD could gain ground over those next quarters. So fundamentally, everything you're saying could end up being true. But what I'm saying is the stock price may not reflect that.
Exactly. But what I'm saying here is that from a technical standpoint of where I am in IT, that they have a product that is 1/3 faster, if not more, than Intel's leading product, and then it's almost 25% cheaper.
Right.
Now you have big wigs, big names like AWS, which is Amazon, saying we want that chip, and you need to make a whole lot of them.
Right.
And
Right.
then they're getting rid of Intel.
Wow.
Now there's rumors, and I'm just putting this out there. It's a rumor. It's not fact. I can't name my sources, but Apple wants some of what AMD has. So there's a high probability, from what I heard, that they may go away from Intel in the future.
And the thing about a move like that, when Apple changes a processor, they don't do that for 3 or 4 or 5 years. Okay, they switch to a processor. Apple don't make a move like that. That's like 15-year, 10-15 year move. They don't mess around. So that would be big money for AMD for a long time. So that would set up AMD. Let's say we're both right. Let's say AMD does crash through, but their top line growth over the next 8 quarters shows them taking market share away from Intel. I mean, this is the same argument that I was engaged in with the Microsoft fan back in the 90s, when I was, when the data was showing that every quarter Apple was growing, but they were only like, 5%, some small amount, but their growth rate quarter to quarter was off the daggone charts. So it was just mathematically, a mathematical certainty at some point that Apple was going to be this expensive stock with, in this large market cap because of their rate of growth. I'm saying the same thing could be true here. Listen to what Mike is saying. So at some point, when this washout happens, and in the stock market, it's going to take some great companies down with them. And so, write down, make a watch list on your computer. Get you a Yahoo account or whatever you use, and put AMD in there. And pay attention to the competition, the sales between AMD and Intel, and the information that Mike is bringing, because at some point there'll be a time, and you won't have to ask, well, what should I invest in?
You probably won't get that answer from us, because we're not certified financial planners. If you want a certified financial planner, go to cfp.net and find one in your area and your zip code. But what we can say is, looking at the technicals, there's a probability that you may see a sharp low if you don't see the ABC pattern. However, fundamentally speaking, you should see certain stocks, definitely explode through the roof that we've covered. So AMD is one of those stocks. BlackBerry is another stock. I think we covered that last week, or the other day, that BlackBerry has something called QNext, which is a operating system platform. They bought it for very dirt cheap, and it's going to have a very multi-billion-dollar return on investment as they enter the autonomous car space for our car operating systems. So,
what about Qualcomm? Who's the owner of that company? Are they a standalone company?
Qualcomm.
Okay.
They're standalone.
Okay, because they seem to be making a lot of big moves. They've gained a lot of market share in the smartphone industry.
But they're the dominant player.
Yeah, because I'm pretty sure almost all of the, at least Chinese-made phones, have Qualcomm built in. Their Snapdragon processor.
Qualcomm is like the go-to processor, because it has very little bugs and stuff like that, and it's a thorough processor. Intel used to have a processor in that space, and they couldn't really keep up. Their phones get really, really hot, or the chip on the phone gets really hot in your pocket, and it was just not very efficient. AMD doesn't even have a chip, but what they have been doing is they've been partnering with Qualcomm on heterogeneous computing. So basically, having a Qualcomm processor and an AMD processor paired together is actually very gives you a lot of compute input than just having them separate. So they figured out a way to merge the two. But yeah, Qualcomm is something to look at. Plus, they just won a case in China against Apple, which is what crashed Apple stock too, as well, or contributed to crashing Apple stock. The Chinese government found Apple wrongful in the case against certain patents for iPhone 5, 6, and 7, and maybe even 8 as well, that had patents that belong to Qualcomm. So, and those phones have been removed from the stores, not just in China, but also in the European Union. So the only phones that are available for really purchase outside of the United States in terms of Apple is just the iPhone X. But even the iPhone X has been found guilty as well.
Wow. Okay, that's a big case that they lost.
Yeah, yeah, yeah. Apple's going to be really hurt in the next few quarters. So.
Also, I was wondering, is BlackBerry going to ever make a comeback into phone development? I know they came out with what was it, the BlackBerry X something that didn't really
No, it
hit
doesn't
off
even
too
belong to
well.
them. No, it doesn't
Was
even
it
belong to them.
created by Acer? Or go ahead.
TCL. TCL is a company. TCL is a Chinese company or a company out of Hong Kong.
Okay, because
So they sold the rights.
foray.
They sold the phone rights.
Mm-hmm.
They sold the phone rights to TCL and kind of split off. So it's basically what you see now is this BlackBerry software and BlackBerry phones is actually a TCL product.
Oh, okay, so they kind of did a sell off of their phone business, and now they're focusing more on software.
Yeah, cybersecurity and autonomous cars and IoT and blockchain. Yeah, so the company TCL actually makes a lot of TVs that you see in the United States. If I remember correctly, I think they might be behind Vizio.
Okay, I know Vizio, but I've never heard of this TCM. Was it TCL? You said
Yeah.
TCL. I have to look that up.
Scarlett Chang, what's going on? Yeah, it should be Tango Charlie Lima.
Oh, okay. It looks like they are coming out with a new phone soon themselves. Alcatel. That's definitely a Chinese company, right?
Yes.
Did you guys hear any update about the Huawei executive that's still locked up in Canada? Any updates on that story?
She's on ankle bracelet. She's on ankle bracelet.
Oh, okay. So she can't leave the country.
Yeah, she is the daughter of a high-ranking Chinese official who is basically she's basically a princess.
Right. But most of the high-ranking officials in China, they either how should I say this? Almost all of the big companies in China have the strong links to the CCP, if not directly being owned by them. I don't know. Did you guys talk about this a few weeks ago on any of the Hangouts?
In terms of what the Huawei CFO?
Yeah. In terms of like the implications of this, because I was reading recently that the U.S. put out an advisory that the Chinese government might hold you indefinitely in the country if you visit there, and they, kind of give some BS probable cause, like you insulted the government on a social media network or something to that effect.
Well, yeah, we kind of talked about that. We didn't talk about it deeply, but for the most part, I think I've said before, if you're a American, be careful where you travel in Southeast Asia, because they will arrest you. This is the United States fault. This was John Bolton's idea of we'll stick it to the yellow man by taking one of their princesses. And the thing is, they had all these documents. According to them, they had all these documents on her. So it sounds to me like Central Intelligence kept a tab on her, and was waiting for the right moment. It's impossible for them to come up with this in 24 hours. They had all of these documents from 2014 or something to that effect, or 2011 to that effect. So if they really wanted her, they could have got her back then, but they didn't do that. So if she's violated sanctions, then who else violated sanctions? And plus, in reality, she has nothing to do. She has nothing to do with it, because just because Huawei sold technology or did dealings with Iran doesn't make her the guilty culprit, right? I mean, Huawei is a Chinese company; they are not an American company, so therefore they are not beholden to U.S. Domestic law, and you cannot extradite her from Canada, where they have nothing else to do with it either. Like the whole thing is a kangaroo court.
It's the U.S. flexing their muscles, basically saying, our laws trump all laws, international laws. Even though the JCPOA is still in effect, so it's technically legal for them to do business with, Iran. Same thing with a lot of European companies who are now in a conundrum themselves.
Well, that's what the sanctions that Trump wanted to put on European companies, and that's what pushed the European Union to come up with an alternative SWIFT system so that you cannot arrest any of the European executives either. So they saw the writing on the wall too.
Right. Actually, I think it's kind of even more effective for China, because they have large banks that have no business dealings with the U.S. That's how they're able to, do a lot of their work, trading with North Korea. It's because they hold no U.S. dollars in those banks, so they're really not subject to the SWIFT system, at least in that effect.
It can get even more testy, because now you're talking about cryptocurrencies. Now you're talking about blockchain, and you're talking about wiring payments through private blockchains that can't be monitored, or should not be monitored by the United States government, because it's not in the SWIFT system. That's typically how they implement sanctions, where you can't do business on the SWIFT financial network.
Right, exactly. So I think it's a gigantic mess that it's of our own making. But I don't think it was just Bolton. It was that other guy. Who's the trade guy? No, Peter Navarro and Lighthizer, I believe is his name. Something Lighthizer. Those are the big China hawks. They have been for a very long time, but they were just seen as so crazy that no one. They were never allowed government positions.
Well, what I'm saying about John Bolton, he's the national security advisor, so he's the guy who pulls the who pushes the button for the most part. So,
right.
Yeah, he's the guy that pushed the button behind Trump's back and basically did that. And if potentially Ivanka can't travel either, they may arrest her.
Yeah, I don't think she's gonna make any China trips anytime soon. But I don't know if she went there. Yeah. Oh, good.
No, I was just gonna say, remember that she had her business manufactured in China, so she had to distance herself from that business.
Right, right. And given favorable, either patents or business licenses as well. But the whole thing about Huawei is that ZTE did the same thing, and the U.S. sanctioned them. Within 4 days, the whole company almost toppled, and then I'm guessing some
What do
kind
you
of
mean?
backroom deal. Oh, go ahead.
What do you mean the United States did the same thing?
No, with ZTE, as in they violated the sanctions with dealings with Iran. They got sanctioned. Within 4 days, the whole company was about to be toppled, and then there's some kind of backroom dealings, and they got their unsanctioned.
No, well, they were doing business in the United States, so that's a different story. But
Huawei does
problem
business in
is
the U.S.
that
States as well, though.
yeah, but there's Huawei USA, and then there's Huawei China. So the thing is, who was actually doing the business? And even if they were doing the business, um, there should be a proper hearing first before you decide that you're going to, because sanctions are a prelude to war.
Right.
You put sanctions on Huawei and ZTE is a declaration of war. Those are two Chinese state-run companies.
Right. No, I mean more so that the ZTE one that was handled quickly, but then after kind of that debacle, what kind of prompted him to do it to Huawei again? It doesn't really make much sense. You know what I mean?
Repeat that one more time.
So they did this first to ZTE, the kind of like this shot across the bow against China, and that didn't end up going very well. That kind of escalated the trade wars, trade tensions, tensions between the different countries, and then Trump dropped it, as in he removed the sanctions from them, and then he goes and arrests the other big Chinese telecom company, Huawei's, one of their executives. It kind of doesn't make sense, you know what I mean?
Well, it's two different cases. They didn't sanction ZTE. They actually put tariffs on the company.
Oh, was it tariffs?
That
okay, I thought it was sanctions.
They put
Well, it was basically
implemented
sanctions.
Tariffs.
I don't think it's exactly tariffs because it said that no U.S. Tech companies can do business with them. That's basically a sanction, right? They couldn't sell any of the a lot of the technology that ZTE depends on that comes from the U.S.
Right, but that doesn't mean that ZTE couldn't do business elsewhere. I think it had more. What I'm saying here is that the justification for the for the penalty is different than what they're saying about Huawei. It's different. So
okay.
if they were just going to go after ZTE for that very same reason, then they would have let ZTE collapse on itself.
Right.
But with Huawei, they did not do that. Huawei is pretty big in here in the United States, so I mean they are involved in a lot of your telecom ether networks. So any of those towers that you see on these big buildings are connected to those Huawei networks.
Right, and they operate under different names in the U.S. I don't think they exactly use Huawei, but some of the phones
Huawei.
are. Some of them. I think there's another one. I think they partnered with, I believe it's T-Mobile, and what's the other one? Is it Boost? I believe to make phones for them.
Well, phones are different from the actual ether networks itself.
Right. No, I mean actually, also doing phones, because I know Huawei products and ZTE were banned on military bases recently. I think sometime last year.
Mm-hmm.
But yeah, I guess the more bigger deal I'd say is it makes American business travelers, more susceptible to, false imprisonments, all sorts of things. Kind of sets a bad precedent.
Yeah, yeah. I
Like,
mean,
for example, let's say you said something critical about China, and you went to, let's say, Vietnam and China are on the best terms, but let's say they were. You went to Vietnam, and then the Vietnamese locked you up, and they're like, you violated some kind of crime in China. So it's kind of yeah, it's kind of messed up.
well, when you sign these contracts and stuff like that, I believe there's probably stipulations in there for doing business with the Chinese that you won't say anything offensive about the government.
Right. Well, I mean more so that just kind of arbitrary detentions, and they have law on their book that they have indefinite detention. I believe they call it exit ban, where they can keep any person who does a crime, in their definition, in China or outside of China, and they had to keep them in the country.
Yeah, the United States doesn't really have anything like that in particular because you have your First Amendment, right? So, but they will
Right.
get you on other things like not paying your taxes on time and things like that. They'll use that. They'll leverage that. They know what you're doing, and that's why I laugh when some people on YouTube and the manosphere try to make it seem like, oh, well, I'll just I'll change my avatar to a shield or something like that. It doesn't matter how you try to hide your identity. They know what you're doing. They have tabs on everybody. If they want you, they'll come get you.
Mm-hmm. Right. But I mean more so that the U.S. generally didn't do that to adversarial foreign countries. Like they're not just locking up Russian business people that are coming to the U.S. or something to that effect. I think even recently here, JD, JD.com's CEO, was accused of some kind of sexual assault here in Minnesota, and basically they had to let him go because they couldn't charge him or didn't have a
Well,
sufficient evidence.
yeah, but they still harass Russian businessmen. That's been widely known. I think Putin had put out an advisory in 2017 or 2016 about Russians traveling abroad to be careful because they've been known to be having their hotels ransacked and having their cars pulled over and just being busting their balls and cracking their tail lights and stuff like that, getting written up. So that's been widely known, at least by the Kremlin.
So then, what kind of steps do I guess black men take when they're traveling outside the U.S. Then get a second passport from like a neutral country like Singapore or something, or Cayman
What do you
Islands,
mean?
or
You mean just regular black men traveling, or?
yeah, well, regular black men or black men doing business abroad. We're saying are you saying we should have a second passport on deck?
I would assume so. And make sure you letting somebody know where you're going because you get trapped in one of these dungeons. Nobody's gonna know where you are. But I don't think anybody's looking for black men, black businessmen. They're not as valuable. It's only blue-eyed, pale-skinned people that are valuable. So that's what they're really looking for.
Okay, I see.
What was that, Preem? You gonna say something? Or was that Scholar Chang? Yeah, I don't know what's going on with the panel.
Yeah, I don't know if they stepped away or not, but
Oh no, I hear
Yeah,
you. I hear you guys.
Okay.
What we got going on in the chat? Has anybody looked at the chat recently? I'm trying to. Haven't looked at it.
Yeah, I was starving, man. I was about to try to cook something, but I'm back.
All right.
Yeah.
Yeah. Ulysses Complex Design said in the chat, I didn't know Huawei did more than phones. Yeah, they their money really comes from big super Ethernet work. So most cell phone providers, you don't see it in the back, but they have what they call these big jumbo networks with these microwave processors, not microwave processors, but these high speed networks. So each tower needs that, and there's hundreds of thousands of towers across the United States that connect to these networks for these fast Ethernet networks. And Huawei makes the cheapest networks available. You have to keep in mind that Huawei also carbon copied Cisco's network switches and routers all the way down to the bug level some years ago, and they got in trouble for that. But since I think they've made some changes, but they still copied a lot of the technology from Cisco, and they got away with it for the most part. So they make these cheap. The same thing with ZTE too. ZTE is also another one, but they operate more outside of the United States than they do within. We know that they've implemented their networks inside the African Union that they built for Africa, and they were using their networks to listen to Africans having their conversations about what they're going to do to the Chinese and things of that nature. So these networks have been long known to be hubs for spying, electronic spying.
Speaking of
data collected.
Speaking of spying, that segues into the question that I was having about servers. So there's a software as a service that I use, and for the CRM and automation and all that, and not sure how to quantify it as far as size or what it needs or requires. But as I was moving some records over, when you're just doing your own records or your contact records or whatever, you kind of put your own little footnotes on there, and sometimes my footnotes can get animated, how it describes things. And, if I hit like a little snag or whatever, I hit the chat, talk to someone, be like, hey, can you take a look at this, that, and the other? And then I'm like, damn, they seen all my shit. There's not like super bad in there, but you never know these days with, all these snowflakes out there, man, and their feelings on their sleeves, and, with their 14th place awards that they used to get, they might get a little sensitive in how I describe certain people, but it's just, it makes me just, remember them. So question is, and again, I can't really quantify it, but like how much, and this, I'm not thinking about doing this, but just out of curiosity, like a server, all that stuff, of course, gets access because they have it in one of their warehouses, their servers. I can connect to it on the internet, and we go back and forth with the upload download thing. But something like that, to have that on a computer, would a desktop be enough to support that? With just like the old school way, with just the update? I'm not trying to do it, but I'm trying to see if going in the future, if folks just start kicking folks off of platforms, like you can't use our platform because of this. Well, because someone say, well, screw you. Just, I'll buy it and I'll load it. And then if I need updates, then I'll connect to you, this and that, or whatever. But I don't want you just having 24/7, having like an open back door to all my shit like that. Could that be a possibility, or would the cost and the size of what you would need it would just be cost prohibitive? Let's say, throw something out there. Let's say something like, I can't even think of anything. I would probably say if you were to in-house something like Google Calendar, no, that's not that big. Or Gmail, no, that's not that big. But any software as a service that let's say like a Trello, or like an Asana, or something like that. If you were to in-house that.
You're saying, would it be more cost prohibitive?
Yeah.
So the way those platforms, those applications are designed as software as a service is so that you can't install it as a bare metal install. it's made to be available all the time. That's what software as a service does. High availability.
Or Preem, do you mean it in regards to more like on the money end, like places like Patreon and that kind of thing?
Well,
Like not getting deplatformed. Is that what you're asking, or?
no, I'm curious on the whole server thing. So yeah, you have access to it, but if you have a hard drive, if it can fit into a hard drive, again, I don't know how much space, computation space, RAM, whatever it may need, but could that, if it's on a hard drive and your hard drive is right there at your feet, it's right there. You know, you turn it on, you're logged in, and you're working on your stuff. It's just not because all it is it's holding information, it's holding data, it's a database, right? So, and it's doing computing, just same shit that always used to be done before everything got moved onto the cloud. So, is it just too big to be able to buy something? Again, I'm not thinking about doing this. That's why I hesitate to even bring this question up. I'm not thinking nobody's thinking that I'm thinking about doing this, but I'm just curious. Would it be cost prohibitive to do that, or like what would like the price range be for a service, something like that? I'll give you an example. The guy who's doing the Black Avenger, he's got all that shit on his. I guess he's got it all on his own servers. And I think the number he kicked out was about 15 to 20 grand, if I remember correctly. But that's for
He
something
had to
like
write the
that.
code.
I'm sorry?
He had to write the code. He had to write some of the code.
Okay. So
Right.
he had
So
to write
he had the framework. He had the initial framework, but he also had to write the code. Code is time consuming. With the difference between the Black Avenger and something like Office 365, right,
Okay.
or even Google Docs, is that those platforms are designed to be in the cloud or not installed on a bare metal system.
Why?
So because it's made for high availability. It's made to be up 100. High availability means you have 100% uptime, meaning it never goes down. It's never at a point where you shut it off or you lose connectivity to it. It's always up, what they call 5 nines. 99.999% of the time, it's up and available for everybody to access.
But so if we're just talking about my version, thank you for kicking that out there, because then that's a much better analogy. Like the old school Windows or whatever, you will go ahead and install it. So, but let's kick this up to current, that 360 thing. Well, if I'm asleep, I don't need it up. And again, if we're just talking just my version, because it just has my data. If it's not,
you may not need it up, but somebody else does.
Okay, so and I'm not saying that we do this. Again, hypothetical is a fantasy universe. Could I still have the same capability and functionality of that if I was to say, hey, how much? Let me buy my own version of that and put it on my.
With Microsoft, you can buy a hard install of that platform.
Okay.
It wouldn't be the same as Office 365, but you will have like Office 2016 or Office 2019 or whatever they call it now. But if you want that robust functionality that it has right now, you're not going to get the same thing. It's not going to be the same thing.
Not even close. If you were to go to like a mini server type of deal.
No.
Okay. Cool.
That wouldn't work. You would have to rewrite the code and things like that. So there's two different platforms. One is a standalone install, and then the other one is a cloud computing based one. Everybody likes cloud computing because they have these small Chromebooks that have very little storage on it because they don't need it, because they all have like Google Drive or Box or some of these other Carbonite or some other storage solution that they have online where they pay $1 for like 100 gigs and they don't have to worry about anything.
True. Okay, I was just curious. That gives me a better idea. Oh, and that gravity. You were asking me something about deplatforming and Patreon. It kind of sort of wings into that. Yeah, absolutely. It kind of sort of wings into that.
Yeah, I think I did a talk about this last year in October called Digital Colonialism. What's happening right now is that they're basically going to run people off of the internet. It's not just you. It's not just social media. All the social media companies all talk to each other. So if Twitter bans you, Facebook would ban you too. If Facebook bans you, then Twitter would possibly ban you, and then that spreads to YouTube, and it can get out of control. That means potentially maybe Airbnb may say, well, we have this email and this IP, and it's been banned from Twitter and YouTube and Facebook. So maybe we might not want to do business with you either. Maybe the federal government might, get involved. CIA or FBI. One of the agencies may say, put this guy in a blacklist because he's potentially hazardous, and so next thing you know, you try to book an Airbnb room and it gets rejected or it gets declined, and you're wondering like what the hell is going on. Or you try to hail on a ride sharing app like Uber or Lyft, and suddenly now your account has been terminated based on some nefarious information from some left-wing group or something like that. This can get really out of control because they all talk to each other and they're all taking orders from Langley.
Right. I kind of brought up the Patreon because I thought maybe that's where Preem was going with it when he said, having your own servers. Because if you start like a parallel kind of YouTube or Facebook or that kind of thing, like for example Gab, it was going all well, but the problem came in when it came to payment processing systems like MasterCard, Visa. If they start stop processing payments for your company, it's basically another form of deplatforming. Because if you can't get the funds for it,
right.
Go ahead.
No, I was just going to say that they're doing it right now with guns. Now you have certain banks and certain institutions that are saying you can't buy guns with our credit cards and stuff like that, our payment system. You may have to go cash, and a lot of gun shops I've been to are basically saying it's cheaper if you come use cash with us. Don't use a bank card.
Right. I see that kind of as the next step. Once they kind of ban you, I guess, or kind of stop doing business with you on the banking sector side of it, where the tech companies and banking companies start colluding in that way, then that spells real disaster for a lot of people.
It can spill out of control. You may have Comcast, you may have Verizon say, hey, this guy has been banned from several platforms. Maybe we might not, might have to suspend doing service with this guy. So digital colonialism is real. That's a real concept. They can get you off the internet. They can basically not just demonetize you, but make it so that you can't have any internet access.
Yeah,
at least not using the initial first. Go ahead.
Oh yeah. Again, I think this is actually going to turn out to be a good thing, a necessary thing. It was gonna happen anyway. But now the way it's rolling out, I mean, it's so messy and so sloppy, and unhinged that it really is a good thing because I mean it's out in the open. It's kind of sloppy. It's kind of messy. But the thing is, it was gonna happen anyway. It's kind of like when they they talk about the Feds overcorrecting, or people was like there was all throwing shit fits when the market was doing what it was doing. But I mean, whatever's happening now, whatever's going to happen in the in the near future, it needs to happen. It needs to happen. Based on what I don't claim to be a market expert, based on what people were saying, there was too much quantitative easing, too much free money. It was buying bad stocks. It was out of control. It's not a matter of if, it's a matter of when. So I mean, this little bump or these bumps that we're gonna come, it needed to happen. And this here,
stock price is too damn high.
Yeah, I mean, it needed to happen. So, it's just hold on for it. Just hold on for the ride. I mean, the same thing with this right here. It was going to happen, and I think they were going to do it. It was absolutely going to happen in a more stealthy type of organized way. But it looks like, they just, people just start saying, fuck it, man. Fuck it, fuck them, go to hell. Kind of like that guy in that vape shop. Get the fuck out of here. They lost their shit. So, let the chips fall where they may. But this
But what's the
also,
solution for that then? Let's say a lot of people start getting kicked off.
oh yeah, I mean,
MasterCard or a lot of these tech platforms.
yeah, I mean,
What's the alternative?
The two things that people don't account for when they're in that kind of television, or they kind of I forgot the word, when they kind of just they don't see any type of outside vision or possibilities or whatever, is one, they think that this is like the end all be all, that there won't be any more innovation, there won't be any more evolution, there won't be anything else, that they've done it, they are the final, they are the apex of technology, they're the apex, of all this tech, and there will be no more, after them. That's kind of why, if things had went another way in 2016, they wanted to roll out this guaranteed income, this, that, and whatever, because it's like, listen, man, this is it. We're about to bring this AI, we're about to bring these robots. This is the end of it. So let's just go ahead and just, get all you guys comfortable, while we go off on our Blue Islands, because, we're the best and the smartest, and this is the end of it. There will be no more smart people behind us. That just speaks against, us as humans, and what we do and who we are, and how the creator made us. So to your question, two things. One is that the solution is humans, like people. There's going to be a next thing, period. Okay, a next thing to this thing. This thing is it. This thing is the shit. It's gonna be a bumpy ride, but there will absolutely be a next thing. Okay, but until then, they can, folks are gonna toast, and folks are gonna be throwing high five. Like, yeah, fuck it, we got them. That's cool. The other thing is, there's money out there, and there's opportunists out there, and God bless the free market system, not just in this country, but people, it could be someone, some foreigners, could be Russia or whatever, whoever will look at this, and they will have the people out there who are tied into all this group think, cult thing. It'd be like, fuck, this guy's Sword and Skills pulling out of Patreon, like some of the top publishers, like Sword and Skill, those guys are pulling in $80,000 a month just on Patreon. I think they tell stories or something like that. Jordan Peterson, 40 grand. That was it. Jordan Peterson between 40 and 60, and David Rubin, probably like 20 or 30. So, I mean, and those are just a handful of guys, but it's not about their money. It's about the bigger issue, the bigger pain problem that needs to be addressed. I don't get caught up into the thing as much as, and the pain, where there's a pain and a problem, that's a huge opportunity for someone to come in, an opportunist, a capitalist, an innovator, someone to come in and solve that, and make a killing doing it. So somebody will see it, and they're going to team up with the next new brain, the next Zuckerberg, the next Kalanick from Uber, whatever. Sorry about the ramble, but that's my short answer.
All right. I think we'll close out. Thank you all for joining us. We have another hangout tomorrow. Black Tech Talk, my mobile OS apps and smartphone development. So be sure to check that out. It'll be episode 121. And with that being said,
Go Cowboys.
Yes, go Cowboys.
All right, catch you guys later.